Test, test, test. All right. Good morning, everybody. Got about 23 minutes to market open, and start with the SPY. We will see yesterday we had the gap up, sell, the first 30 minutes of the day. Second 30 minutes of the day recovered, and then boom, mother bar problem. So what you'll notice is price got stuck completely within this previous range. And we call that mother bar problems because it'll break up, go down, go break down, go up, and vice versa over and over and over until it breaks. So this morning, you'll see we're just barely breaking down. So the question is, do we stay down there? Because we have the 2 going 3 month, which gives us the magnitude to take last month's lows at 714.99. We have the 2-2 reversal week, which gives us the magnitude to take out 722.59. And then if we're a 2 down day and we are red, that's what's going to happen, right? We're going to take all that stuff out. So this morning, we're opening as gap down, which will make it a little trickier to enter. But we will open as 2s down across all time frames. If we take a look at the Qs, it's going to be the similar story here, except Qs will be a reversal. So Qs will be a 2 up, 2 down on the day. 2 down week, 2 going 3 month, just like SPY. And again, it's going to be gapping down very slightly. So we'll have to see what those gaps down this morning. Now, if we look at the futures side of things, the futures still have a little bit to go if they're going to make these new lows down out here. And if we zoom out on the futures, it's going to be the same story. So 2-2 weakers coming off the top of the weekly broadening formation, trying to go down in here. Still 2 going 3 month. And then 2 down day, which you can see on NASDAQ, you'd have to be below all this. So if they can retrigger, we'll see. And on the futures, if we pull up a 12-hour basis, they're still inside. If we pull up a 4-hour basis, you can see we have the 2 to 4-hour to the downside. So this has a target to try and take out the lows of the overnight lows here on the futes. And I imagine ES is going to be pretty much the same. So still inside 12-hour here. Interestingly, it's a little firmer than the NASDAQ, but pretty much the same. And from your pre-market session, you'll have some broadening formations in there. They're going to look something like this on the ES. And we can see NQ is already breaking down and out of it, like so. So they timed it up in here, all the way back down, causing that 4-hour. And everything's going down at this point. So all those time frames agree. That being said, signals today, mostly financials, hit the list of interest. You got big outside shooters in here. And they're right at last week's lows to go 2-2 week. But you can see they're stronger in the market. So they're above their monthly opens, which means the financials, they've actually been buying those all month. Now, as we get closer to the end of the month, seeing some profit taking of that wouldn't be surprising, especially if we have all the indexes going down. But across the board, we'll see a lot of signals there. So we'll see JP Morgan, for example. Closer to the shooter, 2-2 Rev Strat. We got 1, 2 up, 2 down. And that would trigger as a pivot machine gun of all these guys. JP Morgan. Then if we go to Citigroup, you also have the Rev Strat in here. And you'll see it's still 4 days stuck inside of this. But if that kicks in below here, it should break out of that to the downside. And because of that, it's still inside week. So I'd prefer JP Morgan just because at least it's a 2 on the week, so it's doing something. And then if we go to, let's see, Visa and MasterCard, they're going to look pretty similar. Visa has the big shooter on the day for a 3-2-2. And MasterCard has the big 2 up and red on the day. Closer to the 2-2 down. So maybe we get the simultaneous break in financials. If we go to where they are buying, or where they have been buying, we'll see in the utilities for the past couple of weeks, they've been buying this one up, including the past couple of days in here. So it's still not market crash, right? Seems to be they're just rotating out of some of the chip stuff. Like if we go to MU, for example, it gaps up and they sold it down. They did recover it, but then they're coming back in to sell some more today. So we'll have to see what that turns into. But if we go over to your semis overall, see semis, they did gap it up and then sell it down, then recover. But then we're going to be 2-2 today. So they're still having some issues there, and it's just rotating out of that into some more safe investments with the Utes that I can pick up on. Oops. All right. So to summarize, for anyone that's just hopping in here, we'll see if SPY and the Qs are weak enough to stay down this morning, even though they're gapping down slightly. If not, we'll have those broadening formations all the way back up. And if we can stay down, we have all these targets in here. And setting up, financials, we'll have the most signals in here with the big outside day shooter here, and then JP Morgan, Visa, MasterCard also having some shooters. Now, what I want to do is take a quick peek at all the sectors. Not sure if we're up to date here. We're about to find out. And we can't forget IWM. We'll add that in there. So IWM has been a lot stronger, but if it goes 2-2 day, you'd have that with Qs and Dow Jones and SPY all taking out yesterday's low. So that could cause some forced profit taking in there. So Dow, IWM, and Qs would all be 2 up, 2 down this morning. Yeah, so here, give you a little bit more to look at here. So we can see SPY went 2 down yesterday. Qs, Dow, IWM, they're all 2s up. So these are going to be all 2-2 reversal if they kick in. And if we go like this, see it a little clearer. You can see crypto, it's all averaged out in here. They went inside yesterday. I'm not sure if that includes overnight, but materials, industrials, energies, healthcares, utilities, ARKG, which is genomics. You can see that's the type of stuff they've been buying, selling off drones, selling off space exploration with the SpaceX IPO, selling off some uraniums, buying biotechs, buying home builders, buying XOP. So you can see it's not market crash, right? This is all rotation. It's if we look in here, there's still a lot of green out there, right? If it was market crash, this would not be all green. Now, could that change? I mean, if all these went 2-2 today, sure. But we would have to see that happen. So not really. Now, I see a few more signals in here that I didn't get to see earlier, so I'll take a quick look, see what they're looking like. Looks like it's mostly momentum or outside bars. Yeah, all the defense stuff is opening inside days, so it's a little bit firmer today. For some reason, YouTube chat is not working today. Highest probability. So probability isn't really, it's not really a thing. It's either true or false. To say something has a probability is to say that like you're trying to guess what will happen. So it's like Did the indexes all reverse today? It's like, well, what's the probability that happened? It's like it either did happen or it didn't happen. It's not really a probability thing. The better question would be evidence. What's the highest evidence trade today? It's like, well, if we see biotechs and jets and home builders, defense sector, and then Qs, Dow, and IBM, if we see all of those reverse today because they're a little bit closer to doing that, the highest evidence trade would be, hey, everything just reversed. It's going down. And then SPY and Qs would be weaker because they are much redder on their higher time frames. But since they're gapping down, it makes it a little trickier because we don't want to just sell it into new lows. That'd be the bottom of the broadening formation. And if you know anything about the strat, broadening formation is one of the truths, and it's very important. So if we're just selling right into the lows, it's a little trickier because you have nothing to, stop yourself against unless you're going to have a wide stop, which that'll get taken out if you're wrong. So I'm much more interested, just because we don't have all the signals to really talk about here. I'm more interested in trying to time something this morning. It's like if we wanted to sell, we'd want to see SPY gap down, go up a little bit, and then go back down. Because then we could time a short up in here with a stop against high a day. And if we're right, we're really right. Because we have 2 going 3 month, 2 down week, 2 down day, and then another 2 down day. Then we'd have the 2 downs on the 60s. So everything would have to be going down for sure. Good luck, everybody. Good luck. Yeah. I'd rather just not need luck, and hopefully we can get some either some decent breaks in financials and some of these other sectors in our favor, or at least find something. Tesla, take a look. Two-monther. Yeah, so you have the rest of today. So yeah, maybe. Let's see. Your next target's down here at 364.24. I guess since we have a little time to expand, when we say high evidence, what we mean is we want every reason to believe something should work. So, for example, we want full time frame continuity. The month, the week, the day, we like all of that green when we trigger a reversal. So like if materials were to break inside bar up today, pivot machine gun, all of these guys who shorted yesterday, they've got their stops somewhere against this stuff or up and left. So when that breaks, if the month, week, day, 60s, if these are all green, price has to be going up right now, today, this week, and this month. So that'd be high evidence short term. Or not short term, but high evidence on one ticker. Then since this is a sector ETF, ideally, we'd like to align that with its holdings. Dash, yeah, I saw that one when I was scanning this morning. What I'd really like to see, maybe we zoom out on this thing. I'd either want it to go like this, so we can take it back up to trigger all these guys, and then maybe take it back all the way down. Or maybe it breaks up initially first, and then just, you know, falls back off a cliff. All right, well, we got about 7 minutes till the market opens up. pre-market, we can see the futures reclaiming the 3-3 on the 60-minute NASDAQ. While they're still selling off some of the Dow Jones, so it's a little bit firmer. You can see that right here. So this 3-3 is the broadening formation. But we've got about 3 minutes till market opens up. So if we look at SPY and Qs, they're still pretty much just opening 2 down day right at yesterday's lows. All right, open it up here in a minute. Alrighty, here it is. You can see NASDAQ is still reclaiming the threes just a little bit pre-market, but SPY opening at 2 down day, full time frame continuity down. Two's going 3 down. So if SPY's below its daily open today, that's a short, and we should see this drop at least another $4. So as long as that's red, that's true. Now, that doesn't make it easy to short that just because it's right into recent lows on a gap down. We prefer to let it go up first. IWM also opens 2 down day with Dow Jones opening as 2 up, 2 down on the day. Qs would be the last one that needs to break yesterday's lows to make it simultaneously 2 down to start off. Apple, after its big puke yesterday, firms up by going inside day, so a huge puker from the RevStrat turnaround Tuesday name. Financials firm up by going 2260 to start off the day, so Visa, MasterCard, JP Morgan, they're all 2260 up. However, JP Morgan's much closer to becoming a 360 down, going 2-2-day shooter down. You can see SPY gap down, they go red to green. So what's that attempting to do would be the question. Well, it'd be trying to go outside day. So it's got a lot of distance to make that happen. Be trying to reclaim this mother bar. Since we're, 2 going 3 month, 2 down week, we'd prefer the downside. But it's all dependent on the daily 60 opens this morning. But that would be, you can see slight triangle day out, stopping these guys out, and then maybe a 2-2-1er or a 3-2-1er if they're going to try and get that day puking. So you can see slight up, 2-2-1er down. If they're going to puke, that'd be one way to do it. IWM is 2-2 day in force. Qs is 2-2 day in force. SPY is red. And Dow Jones, green to red day. So, puker. IWM has the big pivot machine gun on the day if you want to try and go after that. But like we said earlier, SPY and Qs are weaker. So the big question today is just can we stay below those daily opens if we're going to see them really get to puking? Because what that shows you is that the daily seller's aggressive. If SPY were to just go, micro triangle out and go like this, 2-2-1er down, works for 1 minute, and then they go 2-2-1er up and they change the day back to green, this is creating what we would call a good morning triangle where they sell it down, they buy it up, they sell it down, and then if it goes 2-2, they buy it up again. So it's got to stay below all that stuff. We don't want to see them. We want to see it just drop because if everyone's selling, it shouldn't be coming up, right? Now, if the daily guys are buying or anyone today is trading and buying it, then they might be able to counter that. So we'll see. Financials are still coming back down. So JP Morgan right off the 2-2 day there. Nice. And that should just work if that's going to puke, which it is. So we said the 2 going 360 to cause the daily reversal. Now it's got to stay below that. 334.76 or else no go. And we're still very early in the day, so one of the things we commonly say is let them open. We'll know more once the market opens up a little bit. CAT is going 2-2 reversal day. Healthcare is still jamming to the highs. Staples are still firm. Utilities are still firm. Tech, you can see, looks just like the Qs. 3-2 down and then comes back in. So this is why it's very important when the whole market gaps down very slightly to start the open off. We want to be aware of that. Because we have these threes yesterday in tech, which are broadening formations. So if they're back into that, you're at risk of taking back the other side of the range. So we want to be aware of that. But for now, there's still doji on the day. If you look at the futures, too strong to take out the overnight lows at this point. So the broadening formation is going to look like this. Slightly lower lows to all this stuff. and slightly higher up and all here. So there's NASDAQ. That's what your triangle looks like at this point. If we go on the ES, we'd also say it's too strong to take out the overnight lows so far. So the triangle looks something like this. In this broadening formation, you can see it's internal, or it's consolidation. So test the highs, test the lows, test the highs, test the lows. Then what? Are we going to stay down at the lows, or are they going to change what they're doing? For now, SPY still red on the day, Q still red, Dow is still 2 down. Nothing's really changing yet. JP Morgan, about halfway to target 1. Financials XLF closer to taking the day down, which would confirm with a 2-2 week shooter signal after an outside month, which is a broadening formation. You got Q's going inside Fiverr to start off, Dow going inside Fiverr, SPY is inside Fiverr, IWM is inside Fiverr. So those inside Fiverrs, what could they create, negate, or do would be the question. Well, for 2-2 day IWM, if that goes inside down, it would confirm, or it would do, is what we'd call it, but it would confirm 2-2 day. So if that goes inside down, it confirms the fact that they're coming back through this stuff. It would also confirm the 2 going 3 week. Same with SPY, right? 2-2 week, 2 going 3 month, 2 down day. That inside Fiverr, if it breaks down, would confirm that stuff. Now, if it breaks up, it would negate that stuff, changing the day from red to green. Anyone that's short this morning would go into a losing position. So either side of these inside Fivers get our attention in about 50 seconds to see if they're going to get this day redder for us or not. They're still buying healthcares very aggressively out the gates. Materials gap down, and there's a little bit of buying going on there too. Financials, just about to take yesterday's lows out. Morgan Stanley's also in there on the week. Let's see. Oh, yeah, that was nice. You got the 2-2-2 simultaneous break financials. So we can see, like we said before, it's about evidence, not probability. Because the evidence would tell you, if we go to XLF, tell you this. And it's probably not going to be real time, but if we take a look, yeah, there it is. So you can see Morgan Stanley reversed today. Goldman Sachs continued today. Citigroup reversed today. Bank of America reversed just now, 2-2 pivot machine gun style. JP Morgan reversed today. AXP reversed today. Wells Fargo reversed today. So what could someone not tell you? They could not tell you, hey, financials didn't reverse down today. Because it's just true. And that's the beauty in the strat. So it's like if everything reversed, guess what? Anyone that was long Citigroup yesterday, gone. Long Bank of America, they're getting out right now. Long Wells Fargo, gone. Right? All these guys, they got in trouble. Which is pretty neat, isn't it? And that's why you'd expect it may go instantly. Now, it doesn't mean this has to keep going, though. Because the initial guys yesterday that were long, those are the first guys out here. But we need to use those guys to trigger more. So JP Morgan would have to trigger that weekly open. So far, it has not. If you go to IWM, IWM is taking out the morning highs. Notice inside Fiverr, that gets your attention. Boom, negates. So then the question is, if we're going to get puking, you'd have to reclaim that and go 2-2 down. So right now, that's not a sell. That's negating what we knew to be true. The month is green, the week is green, the day is green. We have no evidence of a seller this week, this month, today, right now. So that's why that inside Fiverr was important. If we go to Qs, currently it confirms. So Qs is still a little weaker. SPY, neither. It's consolidation right now. Dow Jones, closer to breaking down. So while IWM breaks up, the other indexes do not. So it'd be easier to reverse that back down and make it fail. Dow Jones, you can see, breaks the Fivers down. So that's confirming the downside. Qs slightly breaks down. It's still mother bar. We got to get out of that. SPY is still mother bar as well. So Dow Jones is just a bit weaker there, and it's probably due to your financials. It's also probably due to CAT. IWM makes another high of day. So what we'd say is there's some conflict going on. They're selling Dow Jones, buying IWM, SPY inside, and then Qs, they did, they hit the bid very little, but that was about it. They're mother bar issues. So IWM is relatively strong, Dow Jones relatively weak, SPY and Qs going sideways. So notice we just gained evidence. Now we have more evidence of what's going on right now. This tells you JP Morgan, since it's, I believe, in the Dow Jones. I could be incorrect, but there is some financials in Dow Jones. Since financials are weaker, they're going down. Dow Jones is weaker. Gives you more evidence on JP Morgan to add to it because we gained evidence. You can see Morgan Stanley getting destroyed, Goldman Sachs getting destroyed, Citigroup getting destroyed. Pretty cool. IWM, Lotus, squeezing shorts. And that is full time frame continuity at this point. So they're trying to go outside day with full throttle to the upside in the IWM. And notice while they're selling financials. So it's pretty interesting or pretty cool stuff. If you look at financials, it's pretty obvious what's going on there, right? Now, if we put them all up, you can see they're not selling all of them. MasterCard, Visa, they're rotating in here. Why would they do that? I don't know. Right? They might have some information that they're playing off of. But they're selling all the big banks. MasterCard and Visa, they're buying. So it's a rotation within the financials, not full market crash of financials. And if we go take a look in here, strongest stuff today, and actually, I can't confirm that to be true. Yeah, ARKG, biotechs, they're buying, healthcares, they're buying, XME metals, it's a little stronger today. And I'm really bullish on the metals and miners longer term. So I'm looking for entries to manage risk in there longer term. So if we look at XME, for example, this is definitely something you'd want to know about if you're looking for longer term stuff. This is metals and mining ETF. Bottom of the triangle on the day. Now, why might that work? It might work because you're a consolidation. This is a consolidation. It's just a broadening consolidation. So you'd be buying it at the bottom of a consolidation if ideally we go 2 week or maybe inside week up next week, but it's pretty neat. Firming up. Airlines are still firm. Uraniums are gap down and buy to start the day. Just a little bit. Dow Jones still getting destroyed. So you can see we gain evidence over time. Dow Jones, they're selling it with financials for now. Now that could change, right? Actually, let's see. Yeah, so right on the new 15ers, we see them go 2 down again on the XLF. So for now, they're still selling that as far as we know. Bank of America firmed up though. So notice they're sell. Boom, algorithms got turned off. But is it anywhere near reversing that? No. So we'd prefer 3-1-2 to the downside, Chicago style, in JP Morgan. If we go to SPY, is it still taking out or not taking out high day? True. So notice SPY, they're still making lower highs here. Day is still red. As long as that day is red, we have every reason to believe it's going down today. Same with Qs. Day is still red. As long as that's true, we got every reason to believe it's going down today. However, it's consolidating intraday. These 3 fivers stuck inside of the first fiver of the day. So this is going to break, and it will either confirm or negate. We'll see. Still early to say. You see IWM holding that daily open, so all the time frames are aligning to the upside still. You'll have an inside fiver setting up there. Maybe a hammer 3-minute setting up there. If you want to go after strength. Looks like IWM just went right back to the highs, so in off a oneer. SPY just changed its daily open from red to green. So we can see if we look at IWM, this has to be stronger. It's 2215 to the upside, second 15 of the day. Now, if SPY is a 2215, it would give more evidence to IBM as leadership. But it could also, since we have all this evidence on the downside on these bigger time frames, could also just be slight higher highs to go the other way. So we'll see. But for now, it's 2215. Since it is a slight gap down, that's something you would want to know about. It's changing what's going on in SPY. Because now today, they're not selling anymore. They were selling it a little bit. And if that day is green, they're not selling it as far as we know. And since we have leadership, it does make it easier. So if we look in here, it's like we do have leadership. ARKG, biotechs, healthcares, drones, ETF. You know, we got some stuff that's going up today. If we go twos up, it's healthcares, ARKG, and staples. So it's not like, you know, tech and semis and all the stuff that would normally make the market rally, which is, you know, if we go and take a look there, let's see, semis, they're still two down. They're still red on the day. So they're not buying semis today. That's for sure. At least so far. Same with tech, inside 15, not buying that either. So I'm still not buying it as far as them trying to firm things up. You can see on the second 15 is the JP Morgan. They sold the first 15, second 15 to open. Some slight profit taking right on the flip. Same Bank of America still. Citigroup. So we take a look at the futures. They still have these triangles that they are, well, they're kind of getting stuck in here, but this would be the good morning triangle starting on the futures. So new lows, new highs, new lows, new highs. How are we getting out of this would be the question. In about 9 minutes, we'll have the second 30s of the data open up, and those second 30s always confirm or negate what we know to be true with the decoupling. So if we look at SPY, it's like, well, are they going to change that 2 down day by going 2 up 30 as 2 down, 2 up reversal from the bottom of the broadening formation right here? Or are they going to go, you know, 2 up, 2 down 15ers confirming the direction of the day? That would be the question. So if we just take a look right now, uranium, 2 down, notice gap down buy. That's something we look for because everyone's short in here, they're covering, and then as we come through this range, they're forced to cover. So it's a little firmer there. If you look at small caps, gap down, and then closer to a 2230 back up. ArcX, drones, uranium, URA with URNM looking pretty similar. Tech, you have this big outside bar here, so that would be level of reclaim right there at 180.64 with that outside day as a hammer 30. SPY has the hammer 30 at the level of reclaim if they're going to do that. Qs may have a hammer 30, we'll see. Semis maybe has a hammer 30 there, we'll see. Bitcoin miners might have a hammer 30 as well. So could they go 2230 across everything? Maybe, right? That would change what we know to be true. Will they do it though? That's the main question. And then we go to leadership. You can see healthcare as they went 2 up in the morning. Boom. Anyone short in here? Gone. Full time frame continuity up. Staples, same thing. Here's your broadening formation. You see triangle layout down in here, and then bang, takes them all out again. Then cryptos are actually pretty firm this morning as well as overall. If you're trading NQ futures, how do you do sector confirmation? You would look at SPY, Qs, down IWM, so you'd look at the 4 indexes, because then you can identify if it's weak or strong compared to the rest of the market. And then you would use tech, semis, and maybe you could use discretionary XLY. But tech and semis and Qs would be the 3 main ETFs you'd look at for the NASDAQ. SpaceX, joining the indexes. If you guys recall, the last Friday stream we had, we called for SpaceX to, or actually, I don't know if it was last Friday stream. It might have been a different one. Let's see. I'll have to go check. But we got about 5 minutes to the flip. So we're going to have these hammer 30s SPY setting up, hammer 30s on Qs setting up or gaining evidence, the second 30 of the day, tech setting up, semis, not so much. But you also have inside 15s. So we'll monitor those equilibrium breaks. And you can see if you look at the NASDAQ, this is what we call motherboard issues. Look at this. Boom. All of these inside of that. So it goes 1, tick down, and the 1 restarts price discovery. So you can see lower low, higher high, and then 1, and then 1. And I think it went 1 point higher. So here's higher high. And then does that reject to make a lower low again? Or does it break out, in 5 minutes? We'll see. So this would be gap down buy if we get those 2230s to kick in to gear on the second 30 of the day, something we look for. And we would gauge the magnitude of that to become an outside day because SPY up in here, 739.43 would be that mother bar reclaim if that kicks in. And mother bar reclaim is something we look for because we want to always come back through a previous range. So you can see you chop them up in the middle. Everyone gets chopped up. And then you stop out. Anyone that was trying to buy in here, they get stopped out. If it goes 2230, then we could go back through all these guys and all the longs have to jump back in there. while we're stopping out anyone short who's short into the gap down. So we got to go back to NQ. You're going to see that 5 minute goes 2, stays 2, breaking out of all this stuff. And then we go to the broadening formation. You can see high, new low, new high, new low, stuck, 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 breakout, right back up into the new high by a penny right here. Completing this little sub-broadening formation. So if you look at the 60 minute, it went 3 broadening formation, 3 broadening formation, goes down, goes back in, broadening formation again. 3 hours in a row. If we go to IWM, still 2215, setting up those 30s as well. And Dow Jones will be setting those up as well. So we can see the potential broadening formations, right? Dow Jones up, 2 down on the day. That's the bottom of the broadening formation, because any time you go 2, it can become a 3. And then if it goes 2230, that would kick it in to gear for 30 minutes. So we'll see. We got 2 minutes to open up, and then we're going to see if these buyers actually are willing to come back or not. If we go to tech, you got the hammer 30 starting to form there. Semis, you have the hammer 30 forming there, so that would help out because we did not see those guys join in the rally before, or at least attempting to. You'll have AMD hammer 30s, MU, the broadening formation right here. You can see it's stuck in the middle, stuck in the middle, stuck in the middle, slight lower low, comes back in. So it's trying to go back up there as an outside day if that were to kick in. So we can notice as time's going on, we're gaining evidence where we have all those 2 down and green 30s that could kick in just a minute. So we're going to mine the next flip. Still needs to open. The second 30 of the day is the timing portion of this, because when things happen does in fact matter. Because what could they do? It's like they could open, they could go red on the 30s and then completely change. But if they open and they're green, that buyer comes back the second 30 of the day to try and get some more. NASDAQ breaks, SPY breaks, simultaneous break to the upside. So you can see on second 30 of the day, SPY and Qs, they reversed. Dow Jones also firms up. IWM reversed, also firms up. So now does that confirm or negate, right? As long as it stays above that on the 30 minute, you get 30 minutes. If it were to come back in and flip red, that could go outside 30, changing the day to red. So it's got to stay up there. If we go to tech and semis, tech reverse, semis reverse. So you have evidence for 30 minutes. At least to try and change what's going on there. If we go to staples, staples go 2-2 down from the top of the broadening formation on the 15. So there's your sellers coming in staples, rotating hopefully back into tech. Financials, second 30 of the day. Notice this is slightly different, right? It's red. So financials, you go to JP Morgan. See how it's still below your daily signal and it hasn't come back and it went instantly? You're good. You don't have to do anything. You can actually get more if you wanted to. And you can move your stop to 332.33 in JP Morgan. Just start trailing that down. Or at worst, I'd have your stop, 332.86 if you're playing that. So the thing to understand is we have that simultaneous break, which is good, but it's got to stay true. And it's due to the fact the only thing we have is we have the day, which is 2 down, and it's green, so it's good, right? That's a good thing. 2 down green. And then we have a 30, which is 2 up. That's it. That's the only 2 up. The month is 2 up in red. Week is 2 down in red. Day is 2 down, slightly green. The only 2 up we have is the 30, which means that's the only thing you have for control is whoever's buying right here. So that has to stay true. And what we'd say is if that doesn't work, the 2 down, 2 up, 2 down, we could take it the other way. So it's a fun thing. We still got 27 minutes. We'll see if that can continue to kick in. And I want it to kick in. It'd be more fun that way. But I want you to be aware that if that doesn't work, there's still a trade. For sure. So at this point, no one could refute the fact that all 4 indexes have reversed on the second 30 of the day. And we'll see. RKG follows through. Uranium's 3.230s. IWM 2.230. TAC 2.230. Uranium's 3.2 again. Small caps, yep. Biotechs continue. ARCX continue. SPY reversal. Dow reversal. TLT reversed. And then cryptos, in a little bit weaker. Energy's a little weaker. So if you didn't know, on a gap down, one of the things you would look for is something kind of like this. Now, uraniums aren't the strongest in the world, so maybe it works, maybe it doesn't, but this is what you look for. So they sold yesterday, so it gaps down, they get what they want. If it goes 2-2 back into that, if it's enforced, you got all these guys who have stops in here and positions in here to take out. So we look for that because we know outside bars exist. So if this goes outside to the upside on the day, that'd be to take that out. 45.66, and you got all these pivots to speed it up in there. SPY, another high day. Dow, another high a day. IWM, 30-minute magnitude taken out. So price did what it was supposed to do by taking out the lows, rejecting, and taking out the highs. And now since there is more pivots, it should speed up. On IWM, you have full time frame continuity. So IWM has the highest amount of evidence because it has continuity in its favor. But small cappers, right? We knew about that first because it was stronger first, and we gain evidence over time. For now, if you look at second 30s of the day, notice JP Morgan, for example, it's not negating. It's also not confirming. So it goes outside and then inside on the 30. So they sell and then consolidation, which means, SPY, they sold it, but then bought it and then reversal versus financials sell consolidation. So it's like financials are just not coming back, but they also aren't going down. So they stopped selling those for now. Maybe XLF is. You got 32215er, so it firms up a little bit more there. If we get a Visa and MasterCard, those are already firm, so they're staying firm. Microsoft selling, weighing down the SPY? Nope. What do you mean? They're buying it today. Green. Are you just saying in general makes it harder for SPY to recover? Maybe. IWM, another high day. Pivots will speed it up. Do you need the 1 hour to reverse? Well, let me give you a proposition. So Gandalf, let's say we're talking and you're like, hey, I'll fix your car. And I'm like, awesome. I need my car fixed this month. And you're like, great, I'll do it this month. And I'm like, so when are you going to do it? And you're like, well, I'll do it this month. See how that doesn't really give me any evidence or any information? It's like this month, sure. But that's like within a window of time of 30 days. Now, what if you said, I'll do it, and I'll do it at 9 a.m. on a Friday, and I'm going to do it on the 26th day of the month. If you come to fix my car, are you fixing my car? Yeah. And that's when you're doing it. So if it reverses on a 30-minute basis at 9 a.m. on the 26th day of the month, is it reversing? Yep. So do you need a 60 confirmation? No. Because there's no like, oh, I need it to confirm. It's no. It just reversed. Does that stay true, or does that get rejected or get reversed against? So it's like it reversed right there on the 30. Same if we go IDBM on the 15, it reversed right here, 297.79. Once it closes, you can say, does it confirm or does it negate? So when that 30 opens, it breaks again, it confirmed. They bought it here as a reversal on the 15. Second 30 of the day, they come back to buy more. Bang, confirm. So if we go to the 60, what did that do? Outside 60. So the 30 and 15 reversals caused the 60 to actually reverse. So if we go to SPY, we had the 2230 on the second 30 of the day, which matters. When that kicks in, what's it going to cause? It'll cause the 60 to reverse. So instead of thinking, I need it to confirm, or I need to wait and see, we can say it's like the whole market on the second 30 of the day reversed for sure. So whatever you're going to do with that information, that's up to you. Some people, you might sell a put. Some people buy the stock. Some people buy the option. But if the whole market reverses, that's something we would like to know about. Like if we look in here, if we go 2 down, notice there's nothing going 2 down right now. Nothing's going down. So if nothing's going down, everything either must be going sideways or up. And if we go 2 up, everything's going up. The only thing's not going up would be home builders, Hack ETF, which was going up, so it's consolidating, solars, financials, communications, staples, energies, a little bit of crypto, but it was going up before, so it's just consolidating. It's like, well, market's got to be going up at this point. Now, does that confirm or negate? We'll see in 20 minutes when this second 60s of the day open up. Because if we're going to get a big follow through, then we would say, that 60 group is important. Because the first hour of the day trades, when that's trading, notice if we look here. So if you look at the middle of the screen, or actually, yeah, I guess we'll do it like this. Month, week, day. Here, we'll go like this. So if you look here, see how the 60-minute and day, they're the exact same bar, same open? Because they're the same open, whoever's buying right now on the 60-minute is buying today as well. Because they're the same open, those groups are indistinguishable. Like if you're just a daily buyer, you're coming in, you have a market order, you're buying the morning open, you show up here and you show up here on the 60. So what matters is on the second 60 of the day, those opens separate. The day open and 60 would be a separate open. So when that happens, that's when we also gain evidence. So like we say, we gain evidence over time. So the second 30 of the day, it was the same thing. If we look at the first 30, the 30, 60, and day all had the same open. We had way less evidence. When the second 30 opens, it separates from the 60 from the day. And that either confirms because the intraday 30-minute guys are willing to buy, or it negates by changing. So it's the same deal. But you can think whenever the opens are the same, it's like on a Monday, the first hour of the day, you have the day, the month, or the day, the week, the 60 opens are all the same. You have the least amount of evidence. When they're all separate, like right now, we have a separate month open, we have a separate week open, we have a separate day open, and a separate 30 open. That's when we have the most amount of evidence, because we can say right now they're buying, today they're buying, this week they're selling, but today they're not. Changes what we know. Because yesterday we would have told you, yeah, they're selling today, they're selling this week, this month, it's a sell. Today we're going to tell you they're buying today, and they're buying right now, because that's what's true. Previous day high, yeah. And it would be that because we have this mother bar and because you got this broadening formation in here. So we draw that out. This is how we time to change what we know to be true. By the way, SPY 30-minute target hit. So that was premeditated. We knew on the second 30 of the day that would be a buy, right? And there it is. Gives you a nice instant winning position, risking about 67 cents at the worst, realized risk. Now that that target's hit, the question would be, is there profit taking or do we just stay up here? We still have 16 minutes, so you can manage that how you'd like. Once the target's hit, if you're a 0 DTE guy, we suggest at least reducing a little bit. Or you can wait the full 16 minutes, and once the second 30 of the day has closed out, then you can decide what you're going to do. But it's up to you. Once you have a winner, you can manage it however you decide and see fit. Tesla call, let's see. Yeah, Tesla, same thing. So this is a really important concept. You're going to love this. This is one of my favorites personally. But look at this. Mother bar issues. Boom. Takes them out. Anyone long in here, stopped out. Once it starts coming in, right when that reclaims, bang, go to the other side of that. Show them who's boss. Same thing as SPY. So still got a lot of magnitude if they're going to complete. 40% on SPY calls off the 30s. Nice. So you can see SPY, there is some slight profit taken from target, which is magnitude on the 30s. 50% rule? Nope. No, see how the low of this 30 and the trigger here, 67 cents. So if you bought it, at worst, maybe you were down 67 cents, which it actually wasn't. It went, you see on the 1 minute, it broke and it went instantaneously, which is what it's supposed to do. Reversal back through a previous range of guys who are short should just work. If those guys are short and they're going to cover it, it's what we prefer to see. Meta Netflix coming up. Let's see. Yeah, so Meta, same thing. So you can see it here. Outside 60. Goes inside. Then it goes down. And then when it comes back in right here and goes green, you know exactly where it's going. Top of this. Gone. So notice, anyone selling this week, every day is a new trading day. So it goes, they sell, it opens, goes down a little bit, and then they buy the second 30 of the day. Watch that. They sold the first 30. Second 30, boom, back through a range of guys who are short, goes instantly. It's pretty nice. Netflix, oh yeah, look at that. So anyone short yesterday into Netflix, they're like, this looks great. Goes 2-2, boom, stop loss, taken out. And it's coming back through a mother bar. So you actually have all the way up into 77.09 and maybe further. Because if you look at Netflix, right here, maybe they're done selling. Right, that might have been all they had. So you got the broadening formation in here on the week. And why would that be true? Because you have an outside month right here. There's your 3. Goes up, comes back in, goes back down, comes back in. You know, maybe next week you get a 2-2 weaker Netflix. That'd be pretty neat. SPY, more highs. You still got 13 minutes. Still good. We got over 100 people tuned in this morning. Almost 200 people. That's pretty neat. That'd be pretty cool. I'd appreciate if you guys hit the like button if you're learning something, or at least following along with what we're discussing. So you see SPY, they're still just at their 30 target. They took it out, and there's still, someone's there with a slight sell order. Now, what you'll notice, if we had full time frame continuity, I would say we have more evidence to just say, like, oh, this is just stopping people out. But I can't tell you that for sure. I don't know. Because this is one 30-minute group that's going after it, taking the offer. This week, this month, we don't have any evidence. It's just today, and it's on the 30. Now, as long as the day is green, you could technically be long and just have a stop at daily open and be like, yep, I'm long today. I'd be fine with that. But I don't know if it's going to be for sure. All I can tell you is we still got 11 minutes on it if they're going to stay up there. If we go to semis, you can see they already came back in. So where would we go if the market were to weaken up again? We'd go to anyone taking out the morning lows. And we don't want to just sell morning lows. We want to cause it. So anyone buying semis right here. Someone did buy semis, right? It broke the morning highs and went further. So when it comes back, if that were to go 2-2 down, we call this shooter counter hammer, which is a broadening formation. It goes down, comes all the way back. Goes up, comes all the way back. So it's a broadening formation in there. You go on a 1 minute, you'll see it. Open, lower low, higher high, there's your broadening formation. So if we were going to see the market go weak, what we'd want to do is time that broadening formation with a 2-2-30 to go from here to here. And if that happened, you'd have the 2-2 day still. You'd have, all that stuff to the downside. The week is red. Maybe it would even change the month to red. It's not that far from it. So on the second 60 of the trading day, when we gain more evidence, semis might be a short because that didn't really work. Now tech, it's a little bit firmer here, so maybe not. We'll have to see. SPY after hitting target, they're still slightly pulling off the highs. Qs was just gap fill. Dow Jones hit its 30-minute target as well, so that's it. That was the magnitude of what that was supposed to do. And IWM, after speeding up in through here, they didn't stay up. Also comes back in after hitting target. So as we get to the second 60 of the day, something we might see would be 2-2-2. 2 down, bottom of the broadening formation. 2 up, top of the broadening formation. 2 down, which should be 2-2-2 as momentum. So semis would be the weakest one. And then anything that stayed inside, financials, for example. This has to be weaker than the rest of the market as the buyers were not willing to pay above the morning highs. Therefore, JP Morgan. You can see it's actually still going. So, still true. And I said that wider stop on JP Morgan to be here at 332.86, which should not get taken out. So, trailing the stops down. For now, it's still down there. We'll see. But Citigroup goes inside 30 as well. Bank of America's inside 30 as well. Morgan Stanley's inside 30 as well. So if they're going to follow through, all those financials would be weaker. Staples, they're still green on the day. 3-2 up. They're still green this week. 2 going 3. They're still green this month. 2 going 3. And then they have the inside 30, so they're still firm there. Things like Costco. Let's see, it's dojis on everything. Walmart, dojis on everything. Not too much in the staples. That's looking interesting. Let's see, Hershey's. Yeah, not so much. But Staples is firm, so I don't know. I'd have to scan to see. If we go to healthcares, that'd be momentum hammer 30. So it goes bam, 2-2-30, 2 down, 2 up into full time firm continuity. Month, weekday, 60 groups, all green. Then you'd have momentum hammer if they're going to keep going after that. If you go to LOY, it's going to be similar. J&J is going to be similar. And for any of you guys that were with us on Tuesday, if you recall J&J, that reclaim of the morning low, since that worked, you can see it broke out, goes up, inside, then down, comes back in, slight triangle layout, and then explodes, which is pretty nice. It was right there from Tuesday. you look at SPY, they made another high a day. So for now, still got about 7 minutes on that 30 to say still good. Qs, they made another high a day as well. So the 30 stays still good in Qs. Dow Jones, similar, and IBM, similar. So got about 7 minutes to the new 60s, 9:30 a.m. We'll see if they confirm, aka they're still buying on the second 60, or if they're done. I'd like to see it follow through. For any of you guys who have access to the current Strat scanner, you should have gotten an email the other day for a password reset if you needed it. Some people, did, some people didn't. It should be in your spam folder. I'd really appreciate if you hit not spam on Google or Gmail or whatever email service you're using, because we're using a different email than we were using before to send those out. %70 on SPY profits, nice. But I'd really appreciate that. It's also going to help everyone else out, so you don't get everything going to spam, Solana ETF is gunning this morning. Yeah, get Sol. I really like the look of that. So we can see it's still mother bar here, but we went inside up in here. And then the slight lower low, but it comes back. So if we compare that to Bitcoin, Bitcoin makes slight lower lows in here. So we had the inside week up. It just didn't really work. It goes 2-2 week down, takes them all out. So it's the bottom of the broadening formation again, triangling them out. But then they firm up a little bit. But Solana, for some reason, it's a lot firmer this morning. I'm not sure why. Silver, let's see. 2-2 day. 2-1-2 day silver. So that times, it's a little, it's going to have a little bit of distance on that week still. So it's not what I wanted to see set up. I wanted to see those hammer months set up. It's looking more like we'd be like inside month and up if we're going to actually turn this around than it would be, a 2-2 month. Maybe that could be different, but if we go to gold, it's kind of similar. You can see gold, though, inside day from the bottom of the broadening formation. So you have this, or if that works on the daily, it's going up there. Then on silver, it's a rev strat day, so it's showing you buyer and seller aggression down here at the lows. So it's like if that works, it'd be up here at 71. I guess if it's up back to 71, that would be really close to taking. Be like, what, $4 away from last one's highs? Maybe. There's a lot that would have to happen. UNH. Yep, they've just been trucking. So much evidence for a red day? No. The higher time frame, sure. But similar to what I was saying before, if you tell me you're going to work on my car this month, there's nothing that tells me nothing about when you're going to do it, how long you're going to be working on my car. It tells me nothing. If you tell me you're going to work on it this week, also tells me nothing. Today and right now, that's what matters to me, because either right now you're working on my car or you're not. So right now they're either selling with the weekly, monthly for evidence below that 60 open, or they're not. So we open up the first 60 of the day, it gaps down. And one of the things we teach, and we've taught for, cumulatively in the strat community over 2 decades now at this point, it's called this. The gap down buy, best perform from exhaustion risk. These are gaps we do not expect to continue in their direction, at least initially to start the day. What do we do on a gap down? We look for a 2-2 back up. This is because we know a gapper will turn into a 2-2 reversal intraday to the upside should it start attempting to go outside day or outside on the daily chart. New traders should stick to the 30 and 60 minute, and then once proficient, the 15, 5, 3, and 1 minute charts can all be used. So what is this? Gap down buy, gap down into a new low, 2230, boom, go the other way. So if we look in here, gap down SPY, 2230, go the other way. So if you don't know what to do, maybe you could take that and just do that. That'd be one thing you could do. Because whenever you have a gap, what it does is it messes with your time frame continuity. And it does that because it opens as a 2, which means it opens at the broadening formation high or low. Anytime you're a 2, it can become a 3, which is why that second 30 really mattered. And now the second 60 is really going to matter, because if this goes 3-2, they're still buying, and it should be up another 6 points up into all this. Microsoft, 2-2 day, yep. So if you look at Microsoft, they also made the slight lower lows down in here at that outside month. So next week, we have a couple days left in the month. That could go 2-2 week, and then it would go inside month next month. So you're probably going to, you might chop them up a bit in there. That's the only thing I'd be careful of. But yeah, 2-2 day, Microsoft, that does time the bottom a bit. Screws with swing traders, yep. And that's why swing trading is difficult. So another truth that we know to be true that applies not just to straters, but every trader in the whole world, because the strat's just true. What makes swing trading more difficult is every day is a constant series of confirming or negating the week and month. The day and 60, which are 2 major time frames, 2 of the 4, they reset every day and every 60 minutes. And that has to do with your continuity. And that's just true for everyone. So it's not like, oh, I trade the strat, therefore swing trading is difficult. It's like, nope. You do anything, it's going to be difficult, period. Which is why you need more evidence. You have to align monthly signals in your favor. You want quarterly signals in your favor, yearly signals in your favor. Because then when you get stuff, you know exactly what's going on. So like MU, for example, if you get this, you get the bottom of the broadening formation with a weekly signal. If that breaks and it's above that, you get all week. When that happens, that's happening at the bottom of an outside month. So that's the bottom of the broadening formation for sure. When that happens, it's the second quarter of the year right there. This is the second, I believe this, the second quarter opened right here. The quarter was green. When that happens, you had a 3-2 year on the yearly buy list. So when the weekly signal sets up after a broadening formation on the month on a 3-2 year, you have all that evidence overnight, because a yearly lasts overnight versus a daily signal does not last overnight. A weekly signal does not last over the weekend. So it's very important that you know how long your signals last and how many you have, especially for swing trading, because overnight only certain signals are actually in force, which the weekly signal is. So overnight, it closes here. The weekly seller comes in overnight and they gap it down. But since they already sold, if they're done selling, they're done selling. If that day's green, then, you know, technically they're done until they can change it. So it's like, how would that weekly seller change the daily open? At this point, we have no signal to do so. BlackBerry. Yeah, so here's an example on BlackBerry. It breaks the week right here. See how that breaks on Thursday? That's true overnight. So it breaks, and then overnight, since that's true overnight, you can have your stop against Thursday's lows. I wouldn't go too much further than that, but this morning when it opens, that's still true since it's still above that. So when it gaps down in here, you have bottom of the broadening formation, gap down buy right there, right into the direction of the weekly signal. You also had the monthly, which is green overnight. And if we go to the year, that's 2 up, that's going overnight. And then you have the quarter reversal, 2-2 quarter, that's overnight too. For now, SPY, second 60 of the day goes inside. Q, second 60 of the day goes inside. Dow goes 2 up slightly red. IWM goes inside. So that changes what we know to be true. The 60s were previously outside bars going to the upside as reversals, and now they are inside bars as retracement or profit taking. Notice, IWM, they buy. Then it goes inside bar in red. That is retracement, not reversal. Because it's not taking out the morning lows, so it's not reversing, but they are taking profit. So that's the difference. It's retracement. When that goes 225er, that's where the profit taking, kicks in right there. So the second 60 of the day does matter because those algorithms were turned on and now they're turned off. So we gain evidence and the daily buyer is no longer here. True. Now, are we anywhere near taking the daily open out? Technically, no. So if you wanted to see this puke this week, right now, that's when you'd want to try and time it to take out, the morning lows. Because if that weekly seller and that monthly seller is actually aggressive, they're here right there. This is where they are. Since it's nowhere near taking the lows out, it's like, how would they do that would be your question. Because it's a 5-minute signal. So it's like in a minute and 30 seconds, they're going to take the morning lows out? Probably not. If they went reversal on the 15-minute, could they take the morning lows out? Probably not, right? If we go 2-2 on the 30-minute, could they take them out? It's like, yep. Well, we're nowhere near doing that either. So notice, we're nowhere near reversing. It's like, how are you going to reverse it then? You can't. These guys are selling. They could if they were aggressive, but they're just nowhere near doing it. If we go to financials went inside up. So that gives us more evidence back to the upside because that was one of the weaker sectors to start the morning off. So you can see JP Morgan, after making low day, they reclaimed it. Goes outside. And now it's also deep inside on the 60-minute. So unless you can get this fiver to kick them back into low day here, which they might. You have this daily signal still. You still have targets to take out. It's probably going to be an inside 60, right? It's like it's got some distance to change that. Goldman Sachs, how are you getting out of that, right? Mother bar issue. You're stuck right in the middle of that. Good luck. When oil stops selling, let's see. VLO is a lot stronger than... Ooh, let's see what this looks like. HPE, ouch. That's a 2-2 month if I've ever seen one. Yeah, so I'm guessing isn't a strategy. I don't know. If oil stops selling, it's like, I mean, if they're still buying oil stocks, then yeah, I guess so. If they, oil might stop selling and then they stop buying the oil stocks. So I don't know. We'll have to see in the future. But SPY, so second fivers of the 60s, they go 1, 3, 2. So, or actually 1, 2, 2. So there's still mother bar here. But what we would say is at this point, we have no evidence of the daily buyer. So if you're trying to be a short seller, you'd be trying to do it from here. You're just nowhere near changing this stuff. You got a lot of distance to make it happen. And you can see, all right, you look at the 60-minute, it's red. This week is red. This month is red. This day is green. But the day is in a downtrend. So when you look at this, this is the top of this outside bar on the 60. During a downtrend on the day, a downtrend on the week, rejection on the month. Ballpark date, whenever this shit show stops happening, excuse my language, but oh my gosh, blows my mind how much of a mess this whole thing has been. I think it's all done, so we can actually finally get to work on that. Apple. Still inside day? Yeah, then no touch it. If you want the market, if you want your stock to recover, you want it to be an uptrend. Anyone short yesterday in Apple, they can technically stay short. It's firmed up. All right, so don't get me wrong. It did firm up. But how are you going to be a 2-up day? You're probably not. At least you're nowhere near doing it now. So you can see on SPY, on that second fiver of the 60, that seller came back to sell more. That's the weekly, monthly, 60-minute seller showing up there at morning highs. I want to see what this looks like. So you can see when that changed up in here. So this was that second 30 of the day, and this is why that mattered. Notice it's pretty conflicted, it's going back and forth. Right here, when that kicked in, you had that 30, the day, the 15, the 60, 2 and 2 going 3, all confirming each other for an instant, immediate rally. And then right on the new 60 flip, we can see they started coming back in a bit, changing what was going on. 2 down 15. This is also the fiver here. But we're inside 30-60, which is pretty neat. Actually wanted to look at that this morning to see what that looked like. So if you look at SPY on the 15, 2-2 15-minute reversal for 5 minutes. That is in control of what price is doing if it's below that. And you can see how we time when those algorithms change what they're doing. Daily 60 buyer, new 60 opens, we gain evidence. Weekly, monthly 60 seller right at high day. So it captures low of day at the open anytime that was green. And then it captures high day anytime the 60 is red. If we go to your semis, which we said was weaker, for the 22230, hammer, shooter, bang, right there. Anyone that bought up into the morning high semis, they go into a losing position against a weekly, daily, 60-minute seller, and their stops are against this and against this. So semis, that's going to low day is what it's trying to do. So compare that to SPY, right? It's nowhere near low day. Semis would take that out more than likely. And that second 60 of the day did, in fact, matter. Now, if we go to financials, they broke up initially, but then they go red. So if we look in here, that would be a rev strat, a reversal strategy of an inside bar. So things like JP Morgan, that might kick back in. We'll have to see if that financials kicks in. But for now, those would still technically be considered weaker because they were not going up to start the morning session like the SPY was, for example. The only issue you're going to have is, since this is retracement, not reversal on SPY, each 15, each 30 is going to matter in here, because consolidation, what will normally happen is it'll go down and then it goes up and then it goes down and it goes up. So you got to keep that control to the seller during that consolidation. And maybe we'll be able to see that. We can see how the fiver, they go into these new lows. And then since that didn't trigger the morning lows out, anyone long in the morning, that might be them buying the dip. I don't know. And that's the joy of consolidations, is whenever you're an inside bar in a bigger time frame, it will go up, down, up, down, up. And a good example of that would be if we go to Microsoft. Since we know how broad information or how price discovery works, you can see it in here. So it goes inside week here. When that happened, this was inside quarter. So look at this. This quarter was an inside bar until, just recently on the daily chart, like yesterday. But it goes inside week during inside quarter, so it's chopping them up, and then it goes down, and then it goes up. Then you'll see it, then it goes down here, and then it goes up. Then it gaps up for gap up sell, then it goes all the way back down. So whenever you're inside, this is what you would expect. Inside goes down, goes up, goes down, goes up, goes down, over and over. Back long, yeah. For now, I prefer, and like we said, it's kind of preference. If you're a weekly guy, you're trying to get that to reverse. If you're a daily guy, as long as the day's green, you can technically be long, and that's why we call it conflict, because you could be doing either. Depends on you know, what your goals are exactly. For now, we can see utilities goes inside 30 down, so they're selling off a little bit of defensive posturing names. Energies pretty flat. Let's go see. SCO. What's this? Ultra short Bloomberg oil ETF. Kicking pattern, yeah. Inside 30, yep. It's interesting. Had a nice 2-2 monther in there. I bet this thing goes to 0 forever. Yep, it does. So if we look in here, while the market's inside, we can pick out some strength. Discretionary is a little stronger, XLY, which might include your Tesla or Amazon type of stuff. I don't think financials, this data is correct. So if we go inside 60 right now, you can see staples, XOP, TLT bonds, energies, biotechs, uraniums, OIH, uraniums, Hack ETF, airlines, SPY, Hack or bots, which is your AI robotics, home builders, utilities, drones, Qs. It's a mess. So you can see SPY during this inside 60, they go down, then they reverse, they go up, then they reverse, and they go back down. And this is those buyers and sellers fighting it out. It's the daily buyer trying to fight against that 60 seller, who is a weekly and monthly seller. So you see the 60, they technically have a little bit more, you know, oomph behind them because they got that monthly and weekly seller to fall back on. Versus the daily guys, it's just the daily guys, and we can't pick up on them on the 60 basis. So it's, you know, just in here. Unless the hour reverses, looks pretty good. Yeah, I'd prefer to give us an outside day. But it's really going to depend on your 60, because your 60 is either going to give control to the daily buyers or give control to the weekly monthly sellers. And since they're inside, you can see it's like they reverse up, then they reverse down, and then they reverse up on the 1 minute, and they come back in. And you see how it's chopping you up to bits. This is what a lot of traders will, you know, get. They'll draw out a broad information like this. They'll take it. They'll be like, all right, it goes, works a little bit, stops me out. Then they might try it again, and they try it again, and then you get just chopped to pieces, which we don't want that to be us. We want to just either sit tight or look for something that's a 2. Like healthcares, that's a 2 on the 60. That's something you'd want to be looking at. Now it's coming into its monthly targets at this point. The 2-2 week did what it's supposed to by taking out the monthly targets. But you can see that momentum hammer 30 we pointed out earlier kicks in as momentum. So Meta, Google, or Meta, Apple, Microsoft, Netflix, all having some buying today. Could be short covering. Adobe, yeah, might be some short covering in those guys. But, you know, they're pretty firm. Staples, you can see off the inside 30, they're still firm in there. So Coke, Pepsi, all the boring Staples names. McCormick. Nope. No, McKesson. What? Campbell chicken noodle soup? Yeah. Gosh, with how the semis are trading, you'd think AMAT would be way off the highs. Look at that. It's just inside at all-time highs. LRCX are pretty much similar. EVGO. No, EVGO not so much. Big ol' outside monther. Look at that. Those earnings were not good enough, were they? More evidence of a daily. Let me see. So the way you can think of it is like, it's not it's not more or less evidence, it's which time frames are giving you the evidence. So it's like this 5 minute, when this is green, technically what that's showing you is the daily buyers right here on the 5 minute. So like whoever was buying this morning on the gap down, right there, that's when they started buying. So if we look on a 5 minute basis, it's like they sold here, second fiver they bought, third fiver they bought, then in here they sold a little bit. The buyers were still in an uptrend though. And then here the buyer comes back, and then they come back, and then they come back, and then some selling, and then they buy here. So it's not more or less evidence, it's just do you have it or not? It's true or false. And then, you know, how many time frames do you have that on? That would be the more or less. So it's like this 5 minute time frame, that's evidence. If the 60 were to go back to green, that would be evidence too. That would give us more evidence. More in the sense that the 60 lasts 40 minutes. The 5 minute only lasts another 26 seconds. So it's two different things. It's all about time. Because like you look at healthcares. So this is that monthly open. That lasts all month. So the guys who bought here beginning of the month, they bought the second week of the month. The third week, 322 for all week. That lasts 1 week. Reversal here, short, and then close it right at the end of the week. The new week opens right here. The second that goes green, the monthly buyer, the weekly buyer, they're back. Anyone that sold last week, they're screwed. If this works, you had inside day up right here on Tuesday. So if you were trading with us Tuesday, we picked up on that. We're like, hey, market's weak today. Healthcares, they're going up. And then they come back Wednesday. They're like, yep, we're still buying. So the weekly, monthly guy, they came back Wednesday. Then they came back Thursday. They're like, yep, we're still buying. And then it blows out all the shorts above these highs. It's blown them out. Then they come back today, and they're like, yep, we're still buying. So it's like they have a big order they're filling. That takes 5 days to fill it. Monday, Tuesday, Wednesday, Thursday, Friday. So if you go to J&J, you say they bought some Monday. Then they came back Tuesday, Wednesday, Thursday, Friday. That's what you're looking for, ideally. Same thing applies intraday. It's like we want where they buy, come back, and just keep going after it. And it kind of it depends how they're doing it. Like in healthcare, you can see what they've been doing. It's like it opens, like boom, jam everything, and then that's it. Second hour of the day opens, algorithms turn off. Today, they open, jam everything. They did break up, but now it comes back in, so now there's some profit taking going on. That's coming after these targets up and left. You can see SPY. They're starting to really get them chopped up in here. Reversal up, reversal down, reversal up. Comes back in, reversal down, reversal up. About to go reversal down. You can see they're just killing them. Beam. I like those genomics ones. ARKG is the ETF. As you can see, ARKG, it's been a lot higher. And we're in a bull market. If you know, for anyone that doesn't believe it, we're still in a bull market. So when you know that, if it's been up at 120 in a previous bull market, might do that again. Right, if we go to Cisco, this had the .com crash down in here, and then we've had a bull market since 2008 pretty much. It's like, yep, they will come back. We call that used to be somebody. So I know Beam's in there. Let's see what CRISPR looks like. CRISPR, they're still working on it, but you got this broad information on the month. They just need them to kick in. There's also like some penny stocks, PRME. That could definitely kick in soon. Need those bigger signals. My first time to watch the strat analysis live. Wow, it explains so much about why the market moves the way they do. I really appreciate that. That's awesome. If you're just learning it, what I would highly suggest is learning what the 3 universal truths are. Because everything we talk about, we try to make sure we are only speaking in terms that we would know to be true. Because there's 3 truths. The first truth is from one bar to the next, there's only 3 scenarios. So you have scenario 1, 2, and 3. Which would look like this. 1 would be inside bar. 2 is directional, breaking up. Or a 2 directional, breaking down from the previous bar. And then a 2, if it rejects, becomes 3. Then once a 3 happens, it can't do anything else. So it doesn't matter how big this gets, it's always a 3. Which means once you take either side of the previous range, that's it. That's what price was supposed to do. So if you look at, what we would say is how price discovery works, inside bars restart price discovery. Then price will take the highs out. If it fails, it will then take the lows out. And then if it takes the lows out and it fails, it's going to go take the highs out. And it's going to do that over and over, rejecting the lows, rejecting the highs until eventually it breaks out. Because eventually you're going to stay at 2. Because you can think of it kind of like, you have a 3. 3, 3, 3. It's going like this. And then eventually it stays 3 like this and just stays and goes in one direction. And then it will restart and do that again. So when you look at anything, you're going to see that. So SPY goes inside 60 minute. Watch what it does. Goes up, goes down, goes up, then slightly down, then up, then down. It's restarting in here. This is your 3. It's going to restart price discovery anytime you go inside bar. And then once it gets out of that, then you're going to be good to go. So the first truth is that there's only 3 things. And the third thing price does is it will take both sides of a range. So the second truth is that from one bar to the next, price has to trade in the direction of the most scenario 2s and 2s becoming 3. So for example, if we load up Apple. So Apple 3 on the month. 3 on the week, 2 down day. So price has to trade in the direction of the most 2s and 2s becoming 3s. So let's just say we go 2 up. So right now, if we count, we would have 2 up 60. Well, that's 1. And then actually, so 2 up 60, that's 1. 2 down week, 2 down month, inside day. So we look at this. Technically, the most 2s are down, but right now it's not going down. So let's just say we then go 1, and then we go 2 down. So if we look at this, and now we count the most 2s. When this broke, it was 2 down 60, 2 down week, 2 down month. Price had to be going down for sure. And if it stays that way, that's what a big puke would look like. 2 down week, 2 down month, 2 down 60, 2 down day, everything's going down. But it's a double-edged sword because if it reverses, so let's say we go 2 down, 2 up, that's how price reverses. Because it was going down, now it's not. When that breaks, technically everyone's short. So anyone selling this month, they're selling. Anyone trading this week, they're selling. Anyone trading today, they were selling. So when that breaks, this forces short covering to happen. And that's part of the reason broadening formations will occur. Because you'll see that reversal changes the day. And then you have a 2 going 3 on the day when this is green. Right when that goes green, it's a potential outside bar, potential 3. So it's going up right now, potential 3 day, and that overrides what's happening here. Because this week, it's going down, but today, it's trying to go up. Right now, it's going up. So if that follows through, now anyone that was short, there's your broadening formation. Goes up, down, up. And then if they're going to go back in the other direction, 2 down, 2 down, 2 down, 2 going 3, that'd wipe everyone out again. So that's what we want to look for. And you'll see SPY here. So down, then up, then down, and now it's getting a little bigger. As they get bigger, you have more traders in here that are going to be trapped in the wrong side when it breaks the highs or breaks the lows. So as it gets bigger, when you break the lows out, you're going to stop more people out. When it breaks the highs out, you'll stop more people out. So we'll see we're inside 15, inside 30, so we're still inside 60s, but we'll just watch this grow over time. Stalking SPY puts. I mean, if you could go 2-2-1er and take this out to break out of this, maybe that would do it for you. We got to be aware whenever that's inside 60 here, it's going to be trickier in the middle. Because it'll reverse up, then it'll reverse down, and then look, it goes right back up. It's like, nah, not fun to trade that. So the second truth is price must trade in the direction of the most 2s and 2s going 3. And since we can do that, we can count, right? So if we just count SPY right now, 2 going 3 month, 2 down week, 2 down day, but it's going 3 to the upside. So 2 going 3 day, 2 going 3 4 hour if we wanted to use that, but let's go like this. We'll use 60, 30, so 15. So 2 going 3, 2 down, 2 going 3 up day. So we have 2 to the downside, 1 to the upside. And then 60-minute inside, inside, inside. So technically, right, we have more evidence on the downside, but right now, 60-minute, that's in control right now. It's doing nothing. Right now on the 30, doing nothing. Right now on the 15, doing nothing. So the question is, what's the next 2? What does that do? If we go 2 down 15, it might go 2 down 30, and then you would have the most 2s down. You'd have 2 going 3 month, 2 down week, 2 down day, it's green though, 2 down 30, 2 down 15. If we go 2 up 15, 2 up 30, 2 up 60, we'd have 2 up, 2 up, 2 up, 2 going 3 up. Most 2s and 2s going 3 would have to be up. So when we look at this indicator I put together just counts it out for you. Let me turn that off. I think this is a 5-minute. But you can see right now, if we just count, this is from the month already down to, all the way down to the 15-minute. To the upside, we have 1, 2 going 3 up, which is the day. To the downside, we have 2. But control, 60, 30, 15, they're in control. They have no control. It's inside. So it's like, how's that going to change? And then the third truth is the way price discovery occurs is in a series of new highs and new lows. So it's like when we go inside, it restarts price discovery. We already discussed. So you get stuck in the middle. It goes 3, down, up, down, right? And then it might do that again. This is how price discovery happens. It takes both sides of a range. And we know that's true because 1 can become 2. If a 2 fails, becomes 3, and then that's it. That's all price can do. So every chart in the whole world is trying to become a 3. And once it does that, that's all it can do. And when you look at that on a smaller time frame, every time you see an outside bar, it's got to be a 3. Or it's got to be a broadening formation. So if we go to SPY and we just go the last 3 days. So if you look in here, there's your outside bar on the day. That has to be a broadening formation. Goes up, goes down, goes up, goes down. There it is. So if we were going to draw that out, we have the higher highs, we have the lower lows, and this is what support and resistance looks like. So it gaps up, they sell down yesterday. There's support, bang, right back up. Then here it is, stuck in the middle. So this is where it restarts. They go down. Then they go up and down. Then they go inside, restarting again. Then they go down. So you can see it's switching back and forth. And if we count, so if we align all that together, what we can say, the day in 60 always control today and right now. It's just a matter of how much control they have. Do they have the month? Do they have the week in their favor? And then the intraday, any shorter time frames that you want to use. So right now we have no control. Everything inside, inside, inside. Never made good money. Well, I'd have to know what you're doing. Because there's a million things you could be doing that I'd have no idea what you're doing. If you're trading every single inside bar you find, then that wouldn't work. If you're not holding your winners, that won't work either. Drawing tool? What drawing tool? And I also think your statement might be true. It's like you've been trading and you've been using the strat to analyze price, and it didn't work. But I don't think that is exactly a reflection of what the strat is. Because that's like saying, like, I've been doing math to add up the numbers on my bank account, and it keeps going down. It's like, well, maybe the math's off. What kind of math are you doing? I don't trust in the strat anymore. Well, that's a shame. Oh, the drawing tool? This is something I put together. I haven't... There's nowhere to share this at the current moment. Yeah, I mean, if it's something people want, then I guess I could put something together and share it. But I just put it together. Well, I've had a version of it for a while, but then I put it together not long ago, the way it is now. So Qs, you have the 5-minute 2-2 reversal to cause the 15 and 30 down right there. So maybe that breaks out of this consolidation. At this point, since it's still inside 60, this is still more likely to chop them up. But if that works, it would cause the 30 and the 15 to break, which it's pretty close to doing. So maybe it works. I don't know. Got 3 minutes, 57 seconds. They got more than enough time to do it. That's our question to Aaron. Give me 1 sec. So if you're in a winning position, but then you get stuck in an inside 60, what do? Yeah, so if you have 0 DTE, get out. It's like you buy it, new 60 opens, goes red, get out. Or you sell it into your target. Because when you're using 0 DTE, either it's going or you get out of it because they will go to 0. Now, if you're using next Friday, you can stick around a little bit longer because you can risk their money. If you just reduce a little bit of it, then you're fine. We take a look at SPY. You can see how this range is still growing by 1 penny. So new low, new high, new low, new high. Right now, this is trying to make the new low again since it's going to repeat over and over. The problem is this inside bar, they are chopping them up. Back-to-back green months, awesome. I'm glad to hear that. Yeah, well, I guess the biggest thing I would say, let me take a look quick. 737. Yeah, I would still prefer to see SPY go up just because we have this day. If the day is green, we still got all day unless they change it. But I think either way at this point, yeah. Well, you can see they're trying to change the 30 to trigger it, but they're still how are we not going to be inside 60 right now? If we're really going to rip, what I'd prefer to see is like tick down and then go hammer up, or maybe just straight up double inside 30 breakout. Yeah. So this is what I would say. If you're someone who struggles with the strat, the first thing is like to realize what the strat is and what it is not. The strat is not it's not like a normal strategy. Like, it is called the strat or the strategy because it's true. It's not like, oh, I put this indicator together that, does X, Y, and Z in these calculations and pulls, the news and does this and that. Then I back tested it for 10 years and it has an edge and there's alpha there. That's not what it is. It's completely different than that. It's a different category. And the category is that it's geometrically true, which means if you're trading today, how would you be a winner today? You'd be a buyer because the day is green. How would you be a buyer? You would buy it when it reverses so you can manage your stop. So it'd be any reversal, such as 2230 right there, which would be the simple one. Or it would be, maybe it'd be a continuation, 2, 1, 2, 5 minute. When that breaks, goes instantly, puts you in a winning position. It's like that. It's just true. Now, how you're going to apply that, it depends on what your goals and what you're trying to do are. Because if you're trying to, like, there's conflicting evidence right now. It's like if you're trying to short and you want to take out this weekly target this week, right? We have 4 hours and 50 minutes to do that. Your strategy might be different than someone who wants to see this go outside day and change what's going on. Because technically both can be true, right? You can be selling this week and in a winning trade, or you can be buying today and in a winning trade. It's like both are true. And that's why anyone who is going to trade the strat, you have to figure out what you can do. It's like, are you a swing trader? That's going to be a little trickier. But are you a swing trader? Then you're going to be trading 2 reversals on the weekly time frames. You're going to hold the winners and add to them, and you're going to get out of losers. Are you going to be, intraday trader? Then you might trade the gapper list. You might trade wherever news is coming out. Or you might trade like the biggest gainers on the year or biggest gainers on the week, and you might just trade that. There's a million different universes and things you could do. But at the end of the day, if you're going to create a winning trade, it doesn't matter what strategy you use. Every winning trade looks like one of these. Because it has to. Like if you go look at some guy who made like $10 million trading on Twitter, which I've seen that happen a few times, right? In one day, normally it's a rev strat. Either a 1-bar rev strat or a 2-bar rev strat. This is normally the one where they make all the money on, including, when we trade the rev strat. So if we go to SPY, here it is. Inside bar, rev strat, 1-bar rev strat. This drops 22 points from the reclaim right there, which is where we'd want to get it short or anywhere up in near the highs. Right there. And that was just true. It was a rev strat. Doesn't matter if you're using the strat. Doesn't matter if you're using EMAs, SMAs. Whatever you're using, if you shorted that, you made money because it was a rev strat. Therefore, if you're not using the strat and you got that trade, it worked because it was a rev strat. If you're using the strat, it worked because it was a rev strat. It doesn't matter what strategy you use. Either your trade aligns with what we know is true and you win, or your trade is against what we know is true and you lose. The place that most traders get tripped up on is that the change of what's happening is what creates the trade. So they'll say, Alex, well, why would we buy it on the second 30 of the day today? It's going down this week and down this month. And it's like, yeah, they're selling this week. They're selling this month. They sold yesterday. It gapped down. When it reverses, guess what they're going to do? They're going to cover some of their short position. Where are they going to do it? Right there when it breaks that. And then it goes instantly because that's exactly what they're doing. Those shorts are covering. The change allows us to actually play that because we can see when it changes. The same way on the second 60 of the day, if you wanted to be a short guy, the second that goes red, that's a change. It was green previously here. They're buying. Daily guys buying. Second 60 of the day, when that opens and that's red, they're not buying anymore. That's a change. So the change is how you make money. When things change is when you're going to make winning positions. So when we look at this, if you notice, every single one of these that's a reversal is a change. 3-2-2 reversal. Huge puke. It continues, and then it starts going the other way by flipping color. That's a change. They were selling, now they're buying. That's a change. That's how you're going to make money because it changed what it was doing. So if you can see when it changes, which we can, that's when you're going to be able to time things that can, make some type of money. So when we look at, anything, where are the biggest trades? It's like, well, here. They bought the first hour of the day Wednesday. They came back more the second hour. Then it goes inside bar. The second this breaks, it was a change in trend. Higher low, higher low, higher low, inside bar right here it breaks. Boom, there's your huge short position. How did that work? As a broadening formation. Why? Because this inside bar restarted price discovery. When inside, slight lower low, slight higher high, slight lower low, slight higher high, inside signal right there. How long does it last? 1 hour. It opens, they sell, it closes here, that was it. Lasts 1 hour. So it's not the strat's fault. If something's not working for you, it's not the strat's fault because it's always there. It's maybe you're just not using it to the best extent or the best way you could. Like if we look at SPY, look at this. When that goes inside 60, like we said, it's going to reverse multiple times. Higher high, lower low, higher high, lower low. 1 penny, higher high, lower low. Dink, 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 dink. You're in SPY puts off the 30 trigger. What I would tell you is you got to be careful because of what I just showed you right here. The fact that it's inside 60, you need that 30 to go. If that doesn't go, you're bottom of the broadening formation, you're going to go outside 30. Because you're inside 60. It didn't even break the 30. It's still, like, look at that. Dink, 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 right? Today's in conflict, yeah. And that's the other thing is the broadening formations, people will say, it's like, how can I go after the bottom or top of the broadening formation if there's conflict? It's like they're selling this week and this month. How could I buy the bottom of it if that's true? It's like, well, when it changes, they're no longer selling. If they're selling this week, but they're not selling today, guess what? They're not selling today. So prices can go up today. If they were selling today, then it's not a buy today. But for now, it's up a little bit. It's up 0.5%. So you can see when this broadening formation kicks in right here, if that takes this out, that's confirming what the day is doing. So the conflict or this consolidation that's going on here, the rejection of that right here, now that we have a big range, look at what's happening. Anyone short in here, boom, they just got blown out in 1 minute. In 1 minute, slight lower low and they get blown out of it. Why would that happen? Because we're still inside 60. It's going to go test the highs, it's going to test the lows, then it's going to go test the highs, and it's going to repeat. It's the most obvious pattern you can find in the world because it happens multiple times. Dink, 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 right? Back and forth, back and forth. And then it's a matter of how are you going to trade this broadening formation with the reversal at the bottom? You're going to do it on a 1 minute? I'd hope not. I'd rather you go do it on, you know, if we blow this up, we want to take that same thing that we just saw, right? 3 goes up, goes down, goes up, goes down. We want to take the same thing. We want to do it on a monthly chart. Because when that breaks at 25, you can buy it for 6 months straight, knowing that's still making these, you know, higher lows up in here. Anytime the month is green, you know for sure that's going on. So if we go on like uranium monthly right here, look at this. So inside bar restarts price discovery. Dink to the downside, dink to the upside, dink to the downside. Now what happens next month if it starts coming back? Well, it'd be trying to go all the way back up there. That'd be a 40% move. It's like, that'd be a good thing to know about. If, you know, if it kicks in, it's got a lot to reverse here. But we want to take what we know and, you know, apply it in a way that makes sense for us. Because if you don't have enough time to sit at the charts, then you just don't have enough time to play intraday. But if you do, then you don't have to wait as long for setups, because they'll set up every day, every 60 minutes you can get a setup. Versus if you're like a weekly investor, it's like, well, it might take 6 weeks for your setup to actually form. Like, look at this. Dink, 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 2-2 reversal right there. That was the one. And that was your trade of the year. And that's it. So if you're a weekly guy, that took a long time, right? You had to wait all of Q1 for that to set up on SPY. It's like, that takes a long time to set up. But on a 1 minute chart, it's like the same exact thing. All the way down here, it reverses here. That takes 6 minutes. So this takes 1, 2, 3, 4, 5, 6 weeks going down here. Then you had the first, you know, quarter up in here. This takes 6 minutes going down. It's the same thing. There's a reversal here, back through this range of guys who are short. Same thing here. These guys are short. It reverses here, back through a range of those guys who are short. Bang, there's your broadening formation. Right there. Dink, dink. Stopped out. Yeah. Without investing the time, you won't succeed. Yeah. Well, and there's ways to speed it up and slow it down. Like the fastest way to speed up your, I guess, your ability to use the strat is to understand everything we just talked about. Like if you can understand the 3 truths to the extent that we talked about here and speak out loud what you see, it becomes much simpler. It's like, oh, SPY goes inside 60. Well, is it anywhere near reversing? No. All right. What's it going to do? Well, it's going to restart price discovery. Dink, 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 dink. It's like, all right, I'll just hold off. It's like, we knew about this the whole time. We knew it here. We're like, yeah, watch this. Watch what it's about to do. Dink, 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 right? And you can zoom back and see that. So if you know, like if you can just know that it goes inside and you know it's going to get tight like this, then you can just hold off. And once it gets bigger, right, like maybe in an hour or so, what if it goes like this and gets bigger? It's like, well, maybe, you know, maybe you could trade it like that. Or what if it gets bigger like this? Right? If it's, once it starts going like this, then it becomes really obvious what's going on. But I wouldn't suggest, you know, getting in too much on those oneers. It never made sense until watching this live. Awesome. I'm glad to hear that. IDBM is usually my go-to. I'm still learning. That's okay. The question you always want to ask is like, what do we know to be true? Well, they're buying this month. They're buying this week. They're buying today. On the 60-minute, they were selling, so this is profit-taking. Because today they're buying, this week, this month they're buying. So that has to be profit-taking. Which means, look at IDBM. This is a little different. So it's doing the same thing as SPY, right? You can see it's like dink, 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 right here. When this goes 2-2 reversal at the bottom of the range, what does that do to the 30? This sets up your 30. So we can see right now it goes 2-2-5er. Anyone short against this stuff, That's trying to take them out for another 2 minutes. So this is setting up your 30-minute, 2 down, 2 up in IWM, which would cause the 60 in about 6 minutes. And that 5er is doing it right there. And you can see as you start taking people's stops out, it speeds things up. Look at SPY. Did we know about that? Boom, breakout right there. So you can see it gets bigger. And like we said before, as it gets bigger, when you hit the tops or bottoms of the broadening range, you're taking more people out. You have more losers on the other side. So the bigger it is, the more likely you are to get this to actually break and, go instantly off of that. So we can see high, low, reversal, bang. Anyone shorting here today? Yeah, wrong. Not going down today. So they tried, but they were not successful. Now this has to stay up there. That's a major thing to know as well, right? Since it's a broadening formation, if it's going to directionally break out and broaden directionally, you have to stay above that. This has to be support at 733.41. If that's not support and it reclaims, it's going to go test the other side, which would be way down in here. So we'll see. It's still pretty tight in here. But we have 5 minutes. When things occur matters. In 5 minutes, we go inside 60-minute. This sets up your 3-1-2 Chicago on the 60. So if they were going to continue and follow through, we would get a 3-1-2 Chicago on the 60-minute. What would that do? If that works, that would cause outside day. Since we know this is a broadening formation on SPY, that outside day just does become, more likely to occur, especially because look at how green it is. This is evidence of buyers today. It's up 5 points. If it's going up 10 points, they have to go 5 points first. So we will have potentially that 60 to cause the day. It's got to hold off for 5 minutes. It might not, but we'd like that to close inside bar so we have the signal. If we go to Qs, still inside 60 as well, setting up the rev strat. So this is something we look for. The reason we look for the rev strat is because it shows you that price discovery restarting, right? It goes inside, which is that broadening formation. Then it goes lower low, and then it sets up the reversal. So if that were to break, you'd have target, target, target. The other reason we look for that is because the rev strat shows you the buyers and sellers agreed on price. The sellers tried to sell it down below this, 1 point lower. The rejection of that selling shows you the buyer's more aggressive than those sellers. So the daily buyer is countering that 30-minute seller group. So that's something we look for. And you can see they're now outside 15. So we'll see on the flip. We got 4 minutes still. It looks like they might break it just prematurely, which is not preferred, but you can see SPY is breaking out of that 1 broadening formation. Look at that. Nice breakout you got there, SPY. I've been experiencing more wins focusing on broadening formation over continuity. They both matter. So this is something, this is another reason why I would say you can't blame the strat for failure because of this. Let me show you. And this might blow your mind. It might not. It makes me... Let me see if I can pop this out. There's a rule that applies to reality in general, and it's the rule of 3, or you could say Trinitarian thinking. For time, right, you have past, present, future, so that's 3. States of matter, solid, liquid, gas. Story has a beginning, a middle, and an end. Podium, right, gold, silver, and bronze. Light, the screens you're looking at, red, green, and blue. Yourself, mind, body, spirit. So you have, your consciousness, your body, and then something that's non-physical, your spirit. Dimensions, length, width, height, right? And then if you understand Christianity, Father, Son, Holy Spirit. So this is just a piece of reality that's true. So when you look at price, 1, 2, 3, 3 scenarios, 3 universal truths. It all applies the same way. So if you forget, or if you leave out one and you say, continuity doesn't matter, you're actually, it's like saying, well, the beginning of a story doesn't matter. It's like, well, it does matter, right? So, because every story has to have a beginning. So not to say that you're wrong. I agree with you in saying that broadening formations are very important. They're important for entries. For understanding, should you hold the position? How much evidence do you have it should keep going? Continuity comes into play. Because I guess you can kind of think of it this way, is like, there's a difference between, so like if we have this, let's say this monthly, oops. So if we have this broadening formation here on the 60-minute, this 60-minute broadening formation, if we're going to try and, if we're going to buy this break, this is different, right? We got 2 down month, 2 down week, outside day. It might work, might not, right? It's either true or false. Either this signal works or it doesn't. That's slightly different than something like, something like this, right? So when we look at this, this month is bright green, the week's bright green, the day's bright green. So when this goes 32260, we have way more evidence. If this actually broadens the way it should, we have way more evidence when it takes this out that it should explode, because they're really aggressively buying this. So if you can think about it, right? Look at SPY. Boom. Was that support there at 733.42? I believe it was, guys. Are we going outside day? I believe we are. Gap down buys are best performed from exhaustion risks. What do we do when we gap down? Look for a 2-2 back up. This is because we know a gapper will turn into a 2-2 reversal intraday to the upside should it start attempting to go outside on the daily chart. SPY, on the gap down, the 2-2-30 back up, attempting to go outside day. That had to happen first. 2-2-30 and this inside 30 break right before the 60 flip, timed by the broadening breakout here and the 2-2-1er here. That had to happen too. And when did the most 2s and 2s going 3 change? Right here at 10:16 a.m. And this was timed, you can see by the indicator. The flip, it walks it up right here. So now, as long as the day is green, it's still going outside day, like we said earlier in the trading day. Either that changes or it doesn't. So that becomes the question. But I would like to see us go outside day still. That'd still be preferred. I only trust FTFC trades. Yeah, see, and everyone's going to do it different. That's the thing with the truth, is it's not overbearing. You know, it doesn't box you in. You can really do whatever you want with it as long as you stay within the guardrails of what is true. And that's the biggest problem I have myself, is I want to think super far into the future. And I don't think that's exactly a bad thing. But if you think too far ahead and you don't focus on what's true right now, it can trip you up a little bit. And I've had that happen, a couple times. However, if you can think, like if you're someone who wants to invest and you want to think into the future, what you can do is make sure the strat is either confirming what you're thinking or negating what you're thinking. It's like, well, if I think this stock is supposed to or should do this based on, whatever your thesis might be, it's like it has to confirm that. It's like I believe gold and silver. I think these are going to be like some of the biggest movers you're going to see in the next, like on a macro thesis, like next year or so. I think there's going to be huge trenders. But that has to be confirmed or negated by what we know to be true about price. So it's like, is it going to up this month? Technically, no. Is it going up this week? No. Is it going up today? Yes. So if I wanted to start a position, I'd start it on the day. If it reverses the week, I'd get in there. And then if we go monthly signals in a month or so, that'd be the next one after the week. So what I'm watching is I'm watching those weeklies. If we can get silver and gold to actually reverse the weeklies, maybe we'll get inside weeks next week. But if we can get them to do so, I want to get in there. And then if we can reverse the months, I want to get more. And if we reverse the quarters, I want to get even more. But at this point, we still have a lot of distance to make that happen for us. It was a little closer last week, but it didn't work out. Now, when we look at SPY, what we could do, or what we could say is there's profit taking now at the high day. So you can see they initially popped up, but then they start coming back a little bit. Now, we have to be aware of that. We don't have to be scared of it, but we have to be aware of that because we know there's a 3 in here. So if we mark out the high and low of this 3 on the 60-minute, that's for sure a broadening formation. What I'd prefer to see is this act as support, or not see price reclaim that, because as long as it's not, starting to rip back through the range to change the daily open, we still have all day to give us an outside day. And I would prefer that personally. But we can see how the 2s and 2s going 3 changed right here from the bottom of the broadening formation, timing that change. And the change lasted until right here, just around high day. And this is using the 15, 30, 60 day, week, month timeframes to count the number of 2s and 2s going 3. So if you look right now, oops. So if you look right now, I know it's kind of small here. It doesn't get bigger, so is what it is. But we can just count, right? So like it's 2 up 60, 2 up 30. If we go 2 up 15, 2 going 3 day. So at this point, there's also another very important concept like we were talking about this morning. When that 30 goes 2 up, it's the only 2 up we have. So it's like 2 going 3 month, 2 down week, 2 down green day. That 2 up 30, that's the only thing we can defend against. Which means either that stays higher low, higher low, higher low, which it did, or it doesn't work. Right now, since it's 2 going 3 day, 2 up 15, 2 up 30, 2 up 60, there's no short signal. So there's profit taking going on, but it's not changing the control just because there's no 2 down here. So in 9 minutes, it could go reversal. But for now, it's, we could say it's just profit taking. JNUG, $10 up today. Yeah, 6%. Yeah. Well, the thing about psychology is it's built in to the strat. So like if you struggle, like if you're like, oh, I sell my winning trades too soon, it's like, all right, what's the solution to that? It's either still good or it's not. So it's like SPY, when you buy this 2-2 week and that works and you're like, oh, I always sell my trades too soon. It's like, all right, hold it until it's no longer good. So it goes 2, 2, 2, 2, 2, 2, right here. That was the first reversal. So like if that's your struggle, it's like from here to here. That's pretty good. If your problem is like, well, I always chase things going into the highs because I'm scared to miss out on those. The first thing is that's a lie because there's obviously a million things. There's so many opportunities. You could pretty much trade anything and you're always gonna have some type of opportunity you can try and capitalize on. Like you go to financials today and be like, I'm going to try and trade that outside day. Right? We could be in here on the 30s in JP Morgan trying to cause these 60s to reverse if we wanted to. I'd rather just look at the indexes because it's simpler for us. But it's like it's built in to fix whatever problem you might have. It's like SPY. I got it on the 30. It went inside. It went up. I didn't add to it, but I held on to it because the 30 never reversed. So I'm just like higher low, higher low, higher low, still good, still good, still good. Give me outside day. Now, if you're like, I want to short it this week, then you could have tried to short it to cause this to reverse. It just didn't work. What about over trading? Stick to the 30-60. Because if you stick out, if you don't trade mother bars and you trade the 30-60, everything becomes very simple. So if we look in here on SPY, we go to the 60-minute. This gets mother bar in here. If you tried to take the 30 down or 60 down, I mean, didn't work. All right, get out. You don't have to trade the mother bar. Chop, chop, chop right here. When that goes inside 60 after a slight higher high, that's the strat. The strat is take reversals from broadening formations. So you get higher high, inside bar, pivot machine gun. That's everything we look for. Bang. Hits the target, get out. There, you're done. Then it gaps up. It's not mother bar problems. That would be gap up sell. 3, and then boom, right here, mother bar issue. Chop, 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 chop. Then it makes the lower low, and it goes 2-2-30s. Right there. Right? You didn't get chopped up in the mother bar. You waited, and then you hit it, going back through the range. So if you're over trading, it's either your time frame's too low, or you're trading mother bar issues where things are not moving. If things are moving, you can trade every reversal. There's no problem with trading. The problem is, are you trading things that are moving? Because if you're in here, SPY, and you're like, I'm going to short this, all right. You know, it works initially, huge puke, I make 50%. Then maybe you make a little bit, comes back in on you. Then it goes inside. It's like, well, we're stuck in this. All right, I'm done for now. Right, and then it goes dink, 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 dink. Right, it's like back and forth in this mess. It's going to be much harder to trade that versus today. Slight lower low, reversal, going back through a range. NVIDIA, let's see it. Yeah, so look at NVIDIA, right? If you traded yesterday, you got destroyed. Now, you could have made a little bit. RevStrat 30, that hit its target. Then here, stuck. But if you traded that yesterday, destroyed. And it's not because you're wrong or you're a bad trader. It's because you lack the knowledge to stay out of it. Right here, inside, stuck. Mother bar issues, don't touch it. Then this morning, ticks down, 2230 up. All right, that didn't work. Get out. Then you get a 2230 up right here. Target, target, target. Boom, that one works. Now you're in. You had this inside 60 right there. That works. You're in. Where's it going? It's trying to go back up to $200. And notice that, you know, that went down 5 cents. That went up $1.50. So it's like, if we're timing the broadening formation with the reversals, you will have a much better time than just trading everything that you can get your hands on. And you could stick to, you know, very specific stuff. So what you can think, so the way mother bars work is this, and you'll see it on the 30 once we show you this. So it's like, let's say we have this day, right? And then we get stuck in the middle. So it's going to go back and forth and broaden until you have a big loser to take out. So let's just say we have this inside day. When this hammer 60 sets up, what we say is we have 60 minutes above this to take this out, the highs of that. So that would cause the day to break. So it's like, boom. There's the hammer 60 up. Now, if we're close to taking out the mother bar, right here, we can use that signal to cause it to break. Perfect. If you're nowhere near taking it out, you're nowhere near taking it out. So it's still going to be chopping up like this. So it's like once it takes that mother bar, now you get this, and then it goes wham, right? Now you get stuff that's happening. Then you get 2, 1, 2, 2, wham, right? And things start happening. Because that inside bar restarts this huge broadening formation for you. So that's going to be very different than something like, you know, let's go to Boeing. So what I just showed you there is really different than Boeing. Look at Boeing. Boom, inside bar. So there's your mother bar issues. If you traded this year, destroyed. Then it breaks. You could have taken that, but it did not take the low of the mother bar. So now you're stuck. Breaks up, doesn't take the high. Breaks down, doesn't take the low. Breaks down, doesn't take the low. Breaks up, doesn't take the high. So you can see, like, the sellers try, then the buyers, then the sellers, then the sellers, then the buyers. Like, they're just trying to get out of here. They're just nowhere near. So it's going to go back and forth really fast. If you get stuck in one of these on, like, an hour basis, you get destroyed because it goes up 30 cents, down 10 cents, up $1, down $1. It's like stop loss, triggered, blow up your whole account. You get destroyed in here. So we have to know that. And that's also why moving averages fail, because you could be the best moving average trader in the world, but once this starts happening, you're toast. So it's going to matter no matter what you're looking at. And that's why we call it mother bar problems. It's a problem. It's like when you're stuck in here, that's a big problem. Once you take the lows out and reclaim it, now it's no longer a problem. Get boy. Give me the other side of that range. Like I grabbed some SPY 737 calls on that 30. And those are way out of the money, but that's because we can gauge where it's actually trying to go. It's trying to go outside day. And if it doesn't work, so be it. But now we got all these targets. See how we're speeding up? And you can see how that 1 minute broadening formation was the cause of all of this. So you could say the strat doesn't work all day long. But at the end of the day, it has to align. If you're a buyer today, this had to align for that to work. And you could see the most 2s and 2s going 3. It was here. Dink. And then it comes back in, but it was still 2 up 15, still 2 up 30, still 2 up 60. So we said that's profit taking. Then right here, it goes 2-2-1er, right there. Dink, all the way back up. Isn't that pretty neat? I used today's expirations. I have some next week expirations just because in my other account I don't trade 0DTE. But so I'm up 40% in next week, Friday, 737 calls. So you can see $1,000 position, 40%, just under $400 gain. And that was my only trade in this account today. That's it. And you can see 10:03. So that was timed. And that's actually 9:03. So it's timed right here on the 2230. That's when I grabbed it. Because we said you're going to want to know about that, right? The whole market reversed on the second 30 of the day. That was just true. It's always about evidence, not probability. How do you manage it when it arrives to the flip? You have a few options. So let's just imagine hypothetically that we're looking at like a daily basis. Let's just imagine that this is the 60 over here. This is the day. Or this is, let me think. This is the day and this is the 60. Wait, am I losing my mind? Okay, imagine this is the 60 minute and this is like the 10 minute or something. So let's say we get a signal. So we go inside and we go bang. And this is that 60 minute open right here. And it works. And then right when the flip happens, we have a few options. Either break even stop because I want to be in the stock. Why would I want to be in it? Well, maybe we have full time frame continuity. If we have a monthly signal and a weekly signal, I might want to just hold on to that. Now let's say I'm an intraday, I'm trading 0DTE. If I'm trading 0DTE on that flip, the first 1 minute 2 down, I get out. Because I just want to be in here when it starts going up and get out the second it's no longer doing that. Or maybe I'm trailing my stop. So let's say right here, I reduce half and then I walk my stop up using an EMA, SMA, parabolic SAR, whatever I want. So something that trails price that's going to go up with price. Those would all be valid options. The thing is there's no correct way. There's just the way that you're going to do it. Because you can either get out when SPY hits this target here, when it comes back in, you can just get out right there and be like, all right, hit my target, get me out. That's how you trade 0DTEs. Or you could be from down here with shares and you're like, no, I'm investing. I want to see if this reverses next week. And if it reverses next week, I want to see if they continue next month. It's like, okay, that's you. And then if you're 0DTE guy and you got it here and they're up 100% here and you take half off, and then you want to go golfing and you hold the rest of them and you come back the last 10 minutes of the day and see if it goes outside day, that's your prerogative as well. That's probably what I'm going to do. So it's like there's no perfect method. There's just a few different ones that you could implement. It's like holding runners, that's one. Holding with a break-even stop if you really want it for whatever reason, that's two. Getting out the second things start changing or the second your targets are hit and it starts coming back, that'd be number 3. Strat doesn't work if you don't know how to trade it. Well, I think a major part of it is just what's true, because most of, like, I've done one-on-ones with traders, and most of them, they're struggling because they believe something that's not true. Like, they'll be like, oh, I can't buy SPY this morning on the 2230 because it's red on the week and the month. It's like, no, not true. And we just proved it to you, and we explained why we could do that. Or they'll say, you know, price must do this or that, and it might not align with what the strat says is true. So like, if we go to the NASDAQ this morning, remember when we drew out all those broadening formations? Here it is. Right? If we go to the 5 minute, remember that big breakout here? This is what we knew was true. When it was down here, bottom of the broadening formation, we knew that was true. And then this was that 5 minute breaking out, and you'll see the most 2s and 2s going 3 changed right in here, which gave you this broadening formation like this. Now, what else do we know is true right now? NASDAQ, top of the broadening formation. So if you wanted to be someone and flip it short, right there, 225er, that's where you'd try and do it. Because if that works, it would go 2230. If that works, this is an outside 60. That's a broadening formation. So, like, technically, you can do that. However, I want to see an outside day myself. I'd much prefer it. I guess the other thing I can add about, like, what's true and what's not. Some things are just hard. Like, you can know what's true, but it can still be difficult. Like, if we look at financials today, so if we wanted, let's say we wanted to trade financials and just, like, do whatever we see is true. It's like, okay, well, this month it's green. This week was 2 down. It was red in the morning, and then it flipped green. The day was 3-2 down, which is broadening formation right here. But then it reclaimed that, changed green. So if we look in this, we had 3. So it went 2, and then it changed to 3. Then it went 1, so it went both ways, inside bar. Then it went 2, started failing, and then closed. It did not become a 3. It didn't have enough time. Then it opened, it went green, and then it broke out. So it's like, this is not the easiest stuff in the world here. Now we can see what's happening. It's like it went 3, and then these 2 bars, this was inside 60 minute, and then it broke out here. But that doesn't mean it, you know, wasn't kind of tricky in there. Like, if we go to a 15-minute basis, you had 3, 2, 2, goes up, reversal here. So maybe you make 5 cents, right? Or you stop out around break even. Then it goes 2 up, 2 down. You could have tried that down, but it closes out, didn't really go anywhere. Then it goes 2 down, 2 up, and then it kicks in 2, 2, and then reversal here. So you might make a little bit of money in there, but, you know, it's still, you got to trade both. If you're trading both ways, long, short, then long, and then you finally make some. You can see NASDAQ on the 5 minute, like we said, it's like you could do it right there, bang, and then here's your 5 minute target. So hit your target. Notice how it goes wham. Why would it do that? Anyone long in here at the highs, right when that goes 225er, they got to start taking profit. That's the broadening formation. What else is true? Most 2s and 2s going 3. 2 down week, 2 down day, 2 going 3 month, 2 down 15, 2 going 3 30, and it's already an outside 60, which means that's a broadening formation right there on the 60 minute. Now, once it hits that 5 minute target, the question is, does it stay there? Because if it reclaims it, it could go 225er up. 30 would be green, 60 would be green, would firm back up. If it stays down in about 7 minutes, you could have a 2 up, 2 down 30 minute. And you could see what happened. Inside, restart the price discovery, tick down, comes back in, ticks up, comes back in with the 225er. Microsoft, strong buying. Well, at this point, 2, 2, 2, 2, 2. Let's see. It's currently 3, 2, 2, 15 going the other way. So this is causing some profit taking there. So we go back to SPY and we look at control. SPY is inside 15 minute. So that's going to do what? Restart price discovery, 3. That's your new broadening formation. Then it goes 1, they agree on price. Then the buyer tries to buy it up. What if that doesn't work? They're nowhere near taking this out. So if that goes 2 down, what would that do? It'd probably change the 30 back to red and the 60 back to red. So we can see, after taking out these 60 targets, some profit taking. And that 1 minute could change the 30, could change the 60. In that 5 minute on SPY, it was an inside 5 minute. That signal caused the profit taking back into the range. So you can see that broadening formation. We call that triangle day out, stopping all these guys out. And now 30-60 goes red. Whoever was buying today, their evidence is gone. They go 2 down 15. That is 3, 2 up, 2 down 15 for what, 5 minutes. So whoever's buying today, they're gone as far as we know right there. And that's occurring, it's a little different this time. That's occurring from a reclaim. So if that's successful, what's it trying to do? It's trying to take out the morning lows. They still have a lot of distance to do that. But they're going to create the shooter 30 in 5 minutes. They might create a 2260. We'll see. I would still want the outside day, but that 30 shooter could change what's going on today. So it depends on how you're going to hold, or if you're going to exit, get back in, what you're doing at those targets like we were talking about before. If we go and take a look at what's true. Oh, I didn't want to use that one. Oops. Oh, how do I forget? Oh, there it is. Solana, they're still buying Solana today, and you can see Solana, just how clear that is. Look at this. Goes up, top of the broadening formation here, 3-2. Goes down, bottom of the broadening formation here, and then 2-2 day for another 8 hours. They're trying to go way up there. It's pretty neat. And by the way, GSOL, if you're looking at ETFs, this has options. GSOL has options. How nice was that gap up and sell yesterday? It was very nice. It's fast. So depending on how quick you are, could be trickier. So you can see right now, it's like, what do we know to be true? Well, Qs went equilibrium. It broke higher, and you can see it started to come back in a little bit. However, communications, they're still buying that, which is like your Meta, your Google, that type of stuff. There's other things in there. But IWM also broke its equilibrium higher. And then SPY went momentum hammer higher. So for now, these are all still 2s up. So control is to the buyer. Same with Dow Jones. Control's to the buyer. They're buying some energies inside 60 up, so they're buying above the equilibrium. Materials firmed up after selling them off the second hour of the day. Same with industrials, 2-2 back up, which is like your Cat, your John Deere. Utilities inside 60, that broke up. ARCX, momentum up. Bots, defense sector. So if we just count the number of 2s to the upside right now, we have 28 2s to the upside out of 33. So right now, definitively, no one could tell you, hey, the market's going down, get out of your longs. If they're looking just at a 60 basis. If you're going intraday, it might be a little different. But at this moment, how is it going down if 28 of the 33 sectors aren't? What is going down? Staples. So a little bit of selling of defensive posturing, and then the rest of these aren't going down. The only inside bars, you'll have materials, healthcares, OIH, solars. So you have some inside bars, but that doesn't show any weakness. So I still prefer the upside myself. based on that piece of evidence. Now, the only thing with the 60s is it will lag, a 5-minute chart, right? But if you're going to reverse the whole market, you got to reverse 28 stocks on a 60-minute basis. It's like, wow, good luck. Is there a beginner-friendly video that talks about the Browning formation? There's probably a good few. The only thing is, I hesitate to say just go search on YouTube, because man, I don't want to speak bad about anyone, because we all get our problems. But a lot of people, when they explain what the strat is, they just explain it way wrong. So yeah, I would look at Sarah's. I think Sarah has it too. Yeah, I would look at Sarah's 2023 Stratification course, Broadening Formations. I would trust that. But the simplest way to understand it is just broadening formations are scenario 3s, and you can't have a 3 without a 2 first. That's the truth. So it's we know broadening formations are repeating new highs and new lows like this. So this is what they look like. They are drawn right to left as to include all the data that you can see on the chart, from the lowest low to the left, from the highest high to the left, like this. And they're true because outside bars exist. So this outside day is the 60-minute broadening formation. Lower low, higher high, lower low, higher high, lower low. Since we know these exist, we want to know why they happen. Why do they happen? They happen due to crowded positions. Because once price goes up in here, anyone that was selling before short, they're out. They have their stops against this stuff or anywhere where they sold short in here, they're gone. And then everyone that bought from here to here, they're long. So it's a crowded trade. Everyone's long. All the guys who are short are gone. The first guy that goes to start taking profit when this reverses sends it back through the range. So anyone long in here, their stops are against this and this and this and this and this. Either where they got in or against an obvious pivot like these targets here that we can mark out. So when it reverses, it should go instantly as profit taking's going on, and anyone that was short in here, they can go get back into those short positions and bet on it going down. So what we say is we want to time reversals back through a previous range. So we like the 2 down, 1, 2 up, 2 up, 2 down reversal, 2 up, 1, 2 down, or the 2 down, 2 up reversal. These are the reversals we look for. Whenever you see a 3, it is a broadening formation. So when we look at SPY, we go on the day, if we have the simple strat numbers, this is a 3. So that's a broadening formation for sure. So we can draw that out right to left, and we can see it access support here, it access support here. So true support and resistance is below or above previous pivots, which is why you can draw these out and use them that way. So this morning, if we were to just draw that out, you'd see this is right at low a day. So they tried to get out of it, didn't work, comes back in, goes the other way. And that's how you can think of it. It's they try to sell it down, doesn't work, go the other way. Like last week, they bought it up, doesn't work, they start going back down. And they followed through. So that's all that's going on. And the way you time them, yeah, that's a good mention. The way you time them is when things happen matters. So if we're going to time, if you want to time a big broadening formation, that's going to last multiple weeks, right? If we look at SPY, do you see this big one here? So it goes up, goes down. This was slightly lower low, and then it goes back up. So it looks something like this. When it's up here, the way you time that is the month. When that goes red, that's how you time it. So before the month was red, if you're trying to short it, you're too early. When that month goes red, that's when you can start hitting it. So you can see that month goes red, the week goes red here, that's when you can start hitting it. And that's when they get demolished. Same way on SPY. It's in the morning, or when it's rallying up here, if you're timing this, you can. It's just going to be, you're kind of early. Now, when that 30 goes red, you at least have that for evidence to try and time it if you're going to. I wouldn't suggest it because it's nowhere near reversing this. But the change of the colors or the continuity is one of the major ways we're going to time it. And then we want to time that with a reversal. So when we look at SPY today, we had 2 down, 2 up. That's a 30-minute reversal to cause or to time the change on the day. So the day was red yesterday. It's green today. That changes. This 230 times that, and it's at the bottom of a broadening formation. That is what the strat is. The strat is to time reversals back through a range when continuity changes. So if you want like a really clear picture of it, it would be kind of like this. So if this is the 60-minute, we have a 2 down. We have a 2 down day, so it's going down, but we want to time the change of that. When this goes reversal, now look at the day, right? And if that works, these targets, target 1, target 2, target 3, that's what speeds it up. So when that breaks, it goes wham, and then it closes. It's like, well, now the day's bright green. So if you have a stop anywhere here, your stop is right at the daily open, so you can hold all day. And then if that works, say it goes inside and then continues, you could get more because you know it's trying to become a 3. Then it goes wham, takes the highs out and breaks out, and now you're in the biggest winner of your life. That would be the goal. I don't know if SPY's going to give it to us today, but for now it's consolidating, so hopefully, I hope so. And then if you're wondering, where do you find the broadening formations to time? It's really a matter of your universe, which you can nail down to the indexes, right? That simplifies it because you're just looking at the SPY, QQQ, Dow Jones, IWM. That makes it simpler. You could do it for a sector, or we have what we call the buy and sell lists. For example, so if we go to the buy list this week, these would be the weekly buy list candidates. And this includes continuation if we turn that off. These are anything reversing or having a signal on the week. So if we go to RXRX, I don't even know if this is up to date, but I guess we'll see. Might just take a while. It's loading. It loads hundreds and hundreds of tickers. It takes a minute. So if you look at SPY right now, inside, boom, right there, breaks down. What's it trying to do? That is trying to take out the 30-minute lows and reverse the 30. If that doesn't work, then what? It's like, well, we're still mother bar to this. So price discovery restarts. Too small of an inside bar with too big of a mother bar here. Unless the sellers are really aggressive, which maybe. Completely depends on if those weekly, monthly sellers actually show back up or not, which right now, they'd have to change that 60 first, which is right here. And you can see right here, it says defend this level. Below it would be the sellers. And that's because what that does is it changes the 60 to red. So you'd have a red 60, red month, red week, which would override what the daily's doing. So if it can defend that, then longs are still good. Yeah, so if we go to RXRX, this would be on the weekly buy list. So you can see you have the weekly inside signal up. And it looks like they also had inside day up today. So yesterday night, if we're scanning through the weekly buy list, what we would see is RXRX or RGNX. I think it's RXRX. I could be wrong. Is it RGNX or RXRX? Yeah, RXRX. Since I had the inside day, there's going to be a broadening formation in there. So you can see, this is Thursday. Went inside day, so they went up. Then they went down, then they went up, and then right here at the open, slight lower low. That is your broadening formation. So when that kicks in, what's happening? This is last week's high. So we have the 2-1-2 week. That's a reversal. When this goes gap down and buy, that kicks in off the broadening formation and then it explodes and then reverses here. So you can buy it here, flip it short there, and you'd use that weekly, it'd be off that weekly buy list or the inside day signal list, but it's the same thing. If we go to SPY, we can see the 5-minute. They are trying to kick it in, so a little bit of selling off the highs. They still have 20 minutes to close out these 60s. to set up a 60 reversal, which would change what we know to be true about the day, because the 60 always confirms or negates what the day is doing. So if we're not going outside day, it would look like a 2260 back down in about 20 minutes. Let's see what the sell list looks like. Some of this data is not up to date on my end. Let's see. Spire. It's an interesting looker for next week. So you can see SPY on the Fiverr. That did work, actually. So it stayed in force, takes out the first target. And notice how it flips what they were doing. So that flip, what does that do? It changes the 60, which causes a 2230 now. So the question would become, is this just slightly lower lows and then they come back up? Or does it set up this shooter in about 20 minutes on the 60-minute basis? For now, you can see 2230 up buy. Inside 30 up continuation, 2 up, 2 down 30 SPY. That's a reversal. How long does it last? 20 more minutes. As far as my preference, I'd prefer to see a slight lower low and go the other way, but I can't tell you that for sure. I don't know. If we go to all the 60s, you can see right now they're selling some of the biotech, semis, small caps, Qs, SPY, Dow Jones. Crypto, Bitcoin miners, a little bit firmer. Communications is still high a day. They're pulling off a little bit, but you can see Google off the inside 30 down in here. Dink right up into the top of this broadening formation like this. So now at the top of the range, Google 225er down right there changes what's going on. Still month in force, still week in force down. Outside day, that's a broadening formation. So maybe that goes 30s down again. We'll see. It depends on what these indexes want to do. Dow Jones went reversal with SPY. IWM went reversal with SPY. So you can see these broadening formations are being reclaimed if you look at the small caps. So inside bar restarts price discovery. Initially, it goes up. It did not sustain that breakout, so it goes 2230 down. What's it trying to do? It's trying to go back through all this stuff. So that's definitely something we'd want to know about as we get to the next flip. That'd be a rev strat, which is one of the things we look for. So we pull that up here. The 2-bar rev strat, 1, 2, 2, something we look for. It also might be a 1, 3, depending on how aggressive this is. But that 2230 is creating that 2-bar rev strat or the 1-bar rev strat on IWM. SPY is 30s in force. So for now, that's 30.22 is true. Qs goes 30s down. So this is simultaneous break as reversal. And this is actually a Randy Jackson on QQQ. 1, 2 down, lower lows, 2 up, higher highs, 2 down. There's your broadening formation. 1, 2, 2, 2. So simultaneous 30s down indexes. Changing what we know to be true. Don't use the 4-hour. You can. You can use whatever time frames you want. $30 and $60. If you could find them without using the bigger time frame, sure. But the you need to use at least 4 major time frames. You need at least the month, week, day 60. Because like we were showing you before, if you go mother bar, right? So let's say you're just looking at the 30 on SPY. If you're just looking at the 30 and you're looking at this stuff, you don't know if you zoom out, you are mother bar 60. Right? If we zoom out, you don't know that this is a mother bar issue. Unless you zoom out a lot on the 30, then you might be able to just put it together in your brain. But that same thing will happen on the monthly. Like you might go mother bar month on a stock you really want to trade, and you're stuck in there for 3 months, and it's not really fun. But if you know it's a mother bar issue, then you also know how to trade it if you're going to. Because if you know where mother bar issues, if it goes up and comes back, you can short it. If it goes down, you can try and buy it to go back, long it. If it's inside, I wouldn't even touch it. But it's like it breaks up, short, breaks down, long. Like you would know to go back and forth with it. So it's important we still use 4 time frames, month, week, day 60. When things speed up, you could shrink it down a little bit if you want. You could use day or like week, day, 60, 30, 15 when the VIX is higher. But if we go to JP Morgan, 2230s down, and you can see on the 60 minute, it went 3 pennies higher, rejection, because we're mother bar issues. So it ticks up, 2230s down. So that sets up a rev strat. To confirm a rev strat day, look at all these targets on JP Morgan. That could turn into a big puker. So if you trade 0 DCE options, JP Morgan, that's a good option. You want to know about that. Because targets speed price up. So if it's going to speed up, those 0 DTEs might go nuts. And that's if these 30s really kick in, which they're trying to on the indexes currently. They have 15 minutes, and then we're going to find out on the flip. Because on the flip, they could go inside bar and firm things all up again. They haven't reversed on the 60. Or the 60 opens, they go 2260 simultaneous break, and you reverse, 38 stocks or 38 sectors. So if we go to these 60s, you can see crypto, hack, drones, blah, 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 right across the board. So these are all 2s up. If we go to 3s, these would be the weaker ones. Biotechs. So biotechs was a little weaker by going 3. But in 15 minutes, if you reverse the whole market, how are you going to reverse the whole market, right? Which means if they reverse everything to the downside, that's really hard to turn around. Because what that would show you is algorithmic selling across every single sector and asset class indiscriminately. Which means, algorithmic selling across everything indiscriminately. That's something you'd want to know about. So we'll find out on the flip, about 15 minutes. But for now, we can say if we go to the 30s, look at the last 3 bars. We can say they reversed some of them, right? Biotechs were a little weaker. IBM, Dow Jones, a little bit weaker. SPY, they ticked down. They didn't really go anywhere right away. Qs didn't really go anywhere right away. So it's going to depend more on the 60 flip. There is some selling going on. ARKG, biotechs, uraniums, little Dow, maybe metals, mining. Oops. But that's why we say when things happen matters. We have 12 minutes to the flip, so we'll find out. After this, I'm probably going to be heading out. When we aren't close to changing the day green to red, any shorts would be a small position with a tight stop since we know there's conflict. Yeah, it depends. I mean, if you go simultaneous break, you could say anyone buying in the morning, they're gone, which means anyone with stops in here, they're going to get stopped out. So technically, it depends on how you're looking at it. The way I would look at it is, hey, simultaneous reversals, at this point, whoever is buying this morning, they're not here anymore. Now, what you're going to do with that information, it depends how you're trading it. You could say, I'm going to wait for the next 60 to see if that's true and that stays true. Or you could say, I'm going to go a small position here and then I'll add when the new 60s open. Because if Alex is, if we're right with what Alex is saying here, and we get, 28 or like 30 of the 30 sector ETFs to reverse at the same time, that's what a market, crash would look like if everything reverses. Which we should be able to see happening if it's going to happen, since we know what a reversal looks like. So like tech, semis, these are the guys you'd probably want to be looking at. Qs, probably don't want to be looking at that. Those would be your weaker ones that we know about because they're below daily open in semis. And then the rest of them, if they all reverse, right, that's a huge issue. And so far on the 30s, you could say they all reverse the 30s. It's a matter of, in 10 minutes, is that still true? And this would be that weekly seller, that monthly seller showing up towards the end of the month, still trying to go outside month, which would be 20 points lower. So that could be a big issue. Like imagine we take out low a day. We drop 7 points, take out the lows. If that happens, who's to say we don't drop another, another 6 points, take out the weekly target? That might happen. Probably would be something we'd want to know about. So in about 10 minutes, we're going to find out if that's what they want to do. If they want to puke her. And if they don't want to do it, we would see everything go inside. So, about to find out. So if you want to think of like, how do I capitalize? So if we might see something like that happen, what would be the best way to capitalize on it? I can't pull it up right now, or maybe I can. Let's see. Come on. Well, there it is. So it's starting to kick in. But I was going to say, if we look at those SPX puts under the low a day, like if you go really far out of the money, if you look at like the 7260 puts, those might be trading at like $100. It's like those could go to a couple thousand if we get them to really kick in, which they're starting to a little bit more now. So we can see how that inside 5 minute here caused the 2-2 reversal 30, caused the 60 to change, setting up or creating 60, potential reversal. That was right there. So if we look at the truth, I call this the price truth framework scanner, which is pretty funny. Let's see. I imagine we'll see, a decent chunk of things 30s down, but we've got about 7 minutes still. So what we say is everything either reconfirms or it negates. So when we look at this, as we get towards the end of these 30s, SPY went 2230. Do they confirm or do they negate? And we say that because it's an aggregation. If we went to, if you just look at it, every single bar, it's like they bought materials, new bar opens, now they sell materials, right? They bought OIH, new bar, they sell OIH. Biotechs, they sold, they come back, they confirm that by selling more. So always, always, always confirming or negating is what price is doing. So the question becomes, do they confirm all the selling that they just did on the 30s, or do they negate it by going reversal? And we can say we're closer, right? Closer to confirming materials and healthcares and Dow Jones, et cetera, all these things who are red. So you can see anything that's like bright red in here, it's going to be closer to confirming. And it's pretty much everything. Almost everything is red. So they sold everything. Do they come back and do that again, or was it just for 30 minutes? Robinhood. Yeah, so if we look at Robinhood, Mother Bar, but since we know broadening formations restart during Mother Bars, look at this. 2260, if that works, it'd go wham, right? And if we do that with the whole market reversing, that's definitely an option, right? You'll see that shooter 30 would have put your attention there for scanning. But you can see how that starts over. It goes up, down, inside bar, bang, shooter 30, ripping back through. So something we look for when the new 60 flip's about to happen in 3 minutes here on the 60-minute SPY, we look for inside bar. And we look for that because we can use that to do things. Kind of like how this inside fiver caused that 30 to break down in here. We can use this inside fiver to confirm or negate whatever was going on before. So if they're going to continue, ideally what we would get is inside 5-minute down as momentum or as a rev strat. My goodness. So we could go inside, poke up, poke down. That'd be, preferred. Or we go inside down, causing the 60 to break down. Either of those would be possible. And the question becomes, it's not how likely is SPY to take out the morning lows. It's what conditions have to be true in order for morning lows to actually be taken out. It's like, well, we'd have to be below the 60 in 2 minutes. We'd have to be below this on the 30. And this inside fiver, we'd have to get below that. So if they're going to puke, that would all have to be true. And then if the market's still going up, then what? Well, all of these guys who are short, they could have an inside 5-minute go against them to the upside right on the 60 flip where the 60 goes green, the 5-minute breaks up, and we start stopping these guys out. So on the flip, it's either, or it's a question, do they confirm? Do they negate? What do they do? Someone just said, I'm going to start scheduling my work meetings to end at 15 and 45 so I can get back for each 60 flip. That's exactly how you want to think about it. Because if you're going to time something intraday, you'd want to time it within the first, 15 minutes of the 60. Because that's the low of the 60 if it's going to go up, or the high of it when it's going down. And that's why the flip matters. In London, yeah, you just answered your question. There's a 4 hour and I was inside. It was inside for ages and it killed me. Yep. Mother bar problems. There's 4 types of losing trades. Another reason why the strat is not a strategy. It's just a quantitative analysis of how trades work. Winning trades look like a 2 in your favor. So if you buy during this, you won, right? Doesn't matter where you bought, you won. 2 in your favor. Winning trade would look like a 3 in your favor as well. So let's say we go 1, ticks down. When this goes 3 in your favor, that's a huge winning trade. That's the biggest winning trade you're ever going to get. And then the only other winning trade would be full time frame continuity in your favor. All the time frames agreeing. Losing trade looks like chopped up trading a scenario 1, right? Imagine trading in here, you get destroyed. You learned that, Savage Ad, right? Made 2K on NASDAQ down on the 15, gave it all back in London yesterday during an inside bar. Yep. That's exactly what it's going to do. Why? Because when you go inside, price discovery is going to restart. So if we have this inside day, it's like dink, 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 right? It's like, what's happening? Well, you try and sell the breakdown. It goes down a little bit, reclaims, goes bigger the other way. And then it goes up, and you're like, shoot, I need to buy it. You buy the breakout, it goes a little bit, then goes way bigger the other way. Then it goes inside, right? And then it opens, goes green, goes up, breaks a little bit, then it goes way bigger the other way. So what's happening? It's a broadening formation, right? It goes down, breaks a little bit, way bigger the other way. It goes up, breaks a little bit, way bigger the other way. And that's going to restart, and it's going to do that many times over. So it'll grow, and if it's still inside, it'll go right back in the middle, and it'll start doing it again, right? And it'll keep resetting until it actually breaks out of the bigger one. So it will do this, and get stuck back in the middle. It'll keep doing this. So if you ever look at a chart that's like really doing nothing, this is exactly what it's doing. It's like small, 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 grow, grow, small, 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 grow, 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 bigger, bigger, small, 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 bigger, 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 small, 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 right? You're going to get destroyed because that's going to repeat over and over and over. If you look at the SPY, you can see right on the 60 flip, 60 goes green, 30 goes green, the day is green. When that 5-minute breaks, boom, anyone short in here, this is profit taking going against them. When things happen matter. Did that matter? It did. Why? Changed what you knew to be true. Aggressive sellers were in here on this 60, and now they're gone. So if it's going to be a short, what do we have to be below? The 60 open, the 30 open, 5-minute open. That would have to change. If it's going to be a long, what would we have to be above? Well, all these opens, which it is. Now the question then is, this is 1 5-minute, right? It's still inside 30, still inside 60. So since we're inside, what's it more likely to do? It's more likely that rev strats. It goes up a little, then it goes back down a little. So you could say if this goes 2 up, 2 down on the 5-minute as a rev strat, that would cause the 60 and the 30. So if you want to be a short guy, that's what you'd want to be looking for. If we go to Dow Jones, they go inside. IWM, you can see the same thing. And IWM has full time frame continuity. So notice, month is green, week's green, day is green. The 60 goes green. Anyone short in here, they're in trouble. Because that's an inside fiver right on the 60 flip back through this broadening formation. And every single time frame's green. So that's where they're in more issues. Because you have, unlike SPY, right? Red month, red week, all of this red. They at least have those guys to back them up. In IBM, those sellers have nothing to back them up. Yeah. Well, for Savage Ad, literally the only difference is like, is it inside or not? Now, depending on how big the range is, it's more or less tradable. Like if you're inside on a 5 minute, like here on SPY, it's like, well, I mean, it goes up 30 cents, down 10 cents. You're not going to make much there. Now for inside 60, this could still move a couple bucks if that's worthwhile to you, you know? But the problem becomes when you're really stuck inside, right? It's like, it's just not going to work. I have my alarm set 10 minutes before each new 30. Yep. But you can see, guys, right? Did that 60 open matter? Definitely. That inside fiver right on the 60 flip, did that matter? Yep. Now, is this triggering anything, though? No. So anyone short on the previous 30, they're not out yet. But you at least have that day in 60 group. If you're a buyer looking to give that outside day, that's your first bit of evidence that it's trying to. If you go to the 15, it would have these pivots to potentially take out. IWM goes 2-2-15 with full time firm continuity, 2 going 3 day. It is still inside 30-60, so you just have to be aware of that if you're gonna try and trade these since they're inside. You have to be aware of it. And this is where, since it has full time firm continuity, you can go 0 DTE and maybe it works out up into here. The only thing is those inside bars make it a little trickier for me to say. Just because now when we look at this, it's got to stay above that. Because if it reclaims that, then you have the broadening formation restarting with these inside bars. So just makes it a little trickier. And we can see SPY. So for 5 minutes, this had the continuity of the 60 and day. And then the 5 minute signal's gone right there. So now how many signals do we have if we count the signals? None, 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 2 week, none. So we had a 5 minute signal, caused movement for 5 minutes, and then boom, nothing. Let's take a look. So for now, nothing's really changing, right? Inside fiver up, they close out. There's some slight profit taking, but it didn't change anything. The 60's still green, the 30's green, and the day's still green. IWM goes 2 up fivers, reconfirming, so that 15's holding. The only issue we're going to have is these inside bars because, like we just explained what mother bar problems are, the fact that this is nice and green, you know, gives us a better odds of actually becoming a 2 just because of when this is happening. But it's going to be up to these fiver guys. Each 5 minutes is going to matter. We got another minute 40 until this closes out. And then ideally we'd see like slightly red and then 2 up again. to take anyone out in here trying to sell against this stuff. Let's see what the futures look like. Get an ES1. So we look at those futures. You'll recall from the morning session, the broadening formation here, we pointed out the futures were, the sellers were too weak to take out those morning lows. Therefore, when the buyer shows up, it blows out all the sellers right up into the top of this. And then we're inside at the top. So it doesn't really change much there. Going into next week, though, what does this create? I mean, it creates a big hammer. So one common thing people will say is they'll be like, Alex, I don't see a broadening formation. Where is it? I thought a price trades in broadening formations. Where is it? It's like, it's about to happen. If you don't see one yet. So if you look at this and you're like, I don't see the higher high yet. Where is it? It's like, just wait, right? Next week, it's probably going up in here and it's going to make that higher high for you. So if we look in here, the one that we would see fractally would be this. These bars all are an outside bar to the inside bar. So when inside, they test the highs, then the sellers sell it down. Then if it reverses next week, Monday, with a new weekly open, that could definitely change what's going on. We could have all these guys taken out in one day. It'd be a crazy move. All right, second? Yeah, second fivers just closed out on SPY, so third fivers of the new 60s. Do they confirm or negate, right? We had inside up, we had 2 up, so they confirmed, but they're red. Then does it go 2 down at negating what they did, or does it go 2 up reconfirming what they did? So you can see 2 down fiver, that negates what we knew to be true. So they had the 60 buyer in here, and there was some profit taking, and then reversal, 225-minute reversal. What's that trying to do? Since it's inside, it could change that. We have inside, it goes up, reversal. What if it goes back down to here? It would cause the 30-60 to break. Now, what if that doesn't work? We're still inside. So you always have to be aware when you're inside, because if you're trying to play that fiver, you have 3 minutes to try and take it down in here. Then a new 5-minute opens, and then you have another 5 minutes to try and figure out what's going on. At this point, there's still nowhere near changing this. So are they going to be successful in changing that, or are we going to stay green on the 60s with the daily guys still present? Since IWM has full time frame continuity, it's still the stronger of the bunch. So you can see on IWM, defend 297.10. So the only way you could say IWM is going down, as far as what we know is true on 30, 60 day week month, it would be below that. Now it's not going up right now either, 30, 60 inside, but it's like, is it anywhere near taking this out? Nope, not really. Not really. Financials, they did take the 60s down. If you look at JP Morgan, that 30 did kick in. So you can see how it's restarting, right? JP Morgan went inside 60. Few pennies up, few pennies down. 30's up, 2-2, they hit their target. Then 2-2 back down, they hit their target down. So just like that. Test the lows, test the highs, test the lows. A quote from a kid in the movie, I see dead people, now it's I see broadening formations. Yeah. They got to be everywhere. That's a really interesting thing, you know, for anyone that's tuning in that's newer. This is not like rudimentary. Like, it seems really simple now, but if you type in R broadening formations rare, in traditional technical analysis, they're considered relatively uncommon. And you can see modern trading frameworks, they are seen as fundamental building blocks of all price discovery. It's interesting that ICT now talks about them. I don't know if that's true. But you can see traditional technical analysis for like the last 100 years was wrong. Way wrong. Said broadening formations are rare, but they're actually the only thing that can happen. There's no other pattern. Can't do anything else. So you can see SPY right now. Look at this. This is what we call a choppy mess. So we're inside 60, inside 30. Look at the 1 minute, right? Tries them up, tries them down, tries them up, tries them down, tries them up, tries them down. Now when we look at the 5 minute for another 15 seconds, so you can see what they're trying to do. They're trying to change that. But that's the really big question. Can we change it? If we flip these back to red, we might be able to get the whole, everything to reverse. But I think this updates every 5 seconds, so I guess we'll see. So if you look in here, communications are reversed already on the 60s. Financials already reversed. And if we go 2 down, filter those out. So you can see communications, financials, OIH, XOP, XLE. So energies, financials, and communications, they're already going down. So those have to be weaker. They go first. We have 0 2s up. So right now, no one can tell you the market's going up. Not possible, because nothing's going up on the 60 basis at least. And then 1, these are all the things that are closer to breaking. So if SPY were to go green to red, that could break the 60. Same with Qs, Dow Jones, technologies, maybe, industrials, maybe. For now, tech is probably the strongest one we see. Metals, mining, uraniums, those are closer to reversing back down on those 60s. So presently, we would say most of the market's inside. You got 28 out of 33 that we track here inside bar. There is no gap. It's a massive candle printed on the screen. Well, so the reason ICT uses fair value gaps is because they don't use continuity. Which is, remember, right? If we go back to this stuff right here, reality is Trinitarian, which ICT would agree with that. But since reality is Trinitarian, where you have solid, liquid, gas, past, present, future, beginning, middle, end, you have 3 universal truths for price. If you miss one of them, you're going to have to replace it with something, or else it's not a complete framework. So the reason that ICT uses fair value gaps is because he has to be able to pick up on who's more aggressive. Because they're not using 4 time frames to do time frame continuity. So if you mark this fair value gap out, what that allows you to see is this buyer's aggressive. Why do we know that buyer's aggressive? Well, the 30, the 60, the day, they're all green. So today and right now, whoever this buyer was, they're more aggressive than the sellers. So hypothetically, you could say if I get an entry in here, which is another thing I'm not exactly... The other thing that, ICT talks about, it's not as clear, is what an entry is. It's like there's a million different types. For the strat, it's either you're entering when continuity changes or you're entering on a signal or a 2, which is relatively simple. But if an entry were to occur in here, you could say this fair value gap shows you an aggressive buyer. This reversal shows you that buyer came back. And that's something we look for. But we do it differently because we want to know, like, how long do we have? How long does this gap actually matter? It's like, well, it would matter for an hour and 30 minutes. So we have 11 minutes left here. We have 41 minutes left here. After that, new 30s open, then that might change. New day opens, right? That wouldn't matter anymore. The other thing, is the gaps. It's not a gap. It's not a gap, right? It's like, what it really is a lack of targets to take out. So when we talk about mother bars, why do the mother bars matter? Well, it's because when you get stuck in the middle, right? Price will go down, go up, go down, go, it'll do this. It's like, why does it do that? It's not because price is designed and you have these algorithms taking your stops out. It's because once everyone's short, everyone's got to cover. And then once everyone's long, everyone's got to get out. Once everyone's short, right? And it's crowded positions going both ways. This happens due to lack of taking out this pivot or taking out this pivot. So you could think a fair value gap is the opposite, or maybe not the opposite, but you could think a mother bar is the opposite of a pivot machine gun. So like one of the things we look for is this. See all these pivots? We call that pivot machine gun because when it breaks, you trigger this, which triggers this, which triggers this, which triggers this, and it goes like this. So when you're mother bar, you don't have that. You have one pivot here, and then it goes the other way. One pivot here goes the other way. One pivot here goes the other way. One pivot here, then it finally breaks this one, and then it goes a little further. Then it goes inside, and then it's pivot, 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 pivot. You can expect that to happen if it works. So a fair value gap, what is it? It's the lack of people to stop out. If I bought it here on the 5 minute, I don't have to get out. When it comes back in here, I don't have to get out. So when it goes 225er, I can get more. And it looks like a fair value gap might act as support or resistance, but it's not actually, this isn't support. If it was support, it would be a broadening formation because broadening formations are how support and resistance actually happens. It was right here. This was support, right? There's support, and then it starts ticking the other way. So you can see there's levels, I guess, to the understanding of it. But I think a fair value gap is it's an estimation of aggression of the buyers or sellers without actually knowing who it is. And then it's also just a different way of saying, there's no pivots. There's no one to stop out, which would speed price up to the downside. Pivot, pivot, pivot. Shut up. That's funny. But you can see, like we were just exactly like we were explaining, right? They'd say that fair value gap was support. It was really just a 2 going 3, 2-2 reversal, pivot, pivot, pivot. So it was easier to get SPY to do this and pop up there instantly than it was to get SPY to puke because we had no one to stop out. Their stops are way down here. And what we say is price is always more likely to go 1 than it is to go 100. So it's like SPY is more likely to go 40 cents higher and take these out and stop anyone out with stops here than SPY is to drop and take this out by going $2 lower to take these guys. It's always more likely to go 1 than to go 100. So what we say is those nearby pivots is always a tight stop guys. It's like whoever's got a tight stop here, boom, take them out. And we use those guys to trigger things. It's like if these tight stop guys triggered the 30, you could have used that to go instantly right into the 30 break. Kind of like in the morning, you can use this inside fiver to trigger this, anyone shorting in the morning, right there, and then boom, it triggers the 30. Same idea. And that's how you tighten your risk up because it's supposed to just go right, almost instantly, I would say. Depends on which type of signal it is, but now you can see SPY, they ticked up. Are we still inside 60? Are we still inside 30? We are? All right. Then that's a broadening formation, restarting all that. Like this. Goes up, then down, reversal, then up, then inside, restarting again right here. Palantir weekly and hourly. Let's see. Yeah, so it's not on the weekly. It's here. See this outside month? That's what you're looking at. So when inside month, down, then up, then down. Bang. So we zoom out, you're going to see this huge one on the daily. So notice it consolidated, then up, then down, and there it is. Ticks up, 2-2 day, then 2-2 day here, marking the bottom. So now what we'd say is like, how much evidence do you have that's happening? Well, if next week is green, you'd at least have that. Next month, you could go inside bar and firm up, but at this point, you're nowhere near, being a 2 on the month to the upside. So we'll have to see. So you can see SPY, they tick up again. Still acting as resistance here, unable to break it. Do they scramble the strat? No. Actually, the news is good for us. We like the news. Because what the news does is it speeds up the series of aggregation, or the aggregation series, you could say. So when news comes out, you'll get a month's move in a couple hours, which means every hour is like a week, which means every 5 minutes is like a new hour. So every 5 minutes you can trade the reversals and it's going to explode. So like if we go to the Fed, if we blow this up, and it's not for everyone. I personally, I like trading. I just don't like going too nuts with it. But if you go to the Fed, this is what a 3-minute chart looks like. It goes 2 up, 2 down, which you're probably not going to get the slippage in there, right? But then it goes inside. Notice when this breaks, it goes $1 in 3 minutes. So it goes break right there. And then once it closes, that's a trade. 3-minute trade goes $1. Sometimes you don't get that for a whole hour. Then it goes inside. Then it breaks. Didn't really work, right? So you might be a scratch, might be break even. Then it goes inside and then boom, right here. When that breaks, that's $1.60. And right here, takes out all the nearby pivots like we were talking about before. So boom, takes these guys out right there. Then it goes inside. This explodes, goes almost $2 in like less than a couple minutes right there. And you can see the broadening formations now starting over. So they go 2 down, didn't work. 2 up, boom, explodes. 2 up, 1. Then when that breaks down, 2, 2, 2, 2, bam, takes them all out. So you can see this series, new high, new low, new high, new low. That's all it's going to be doing. Now, eventually it will break out. So you can see they puke down in here. Goes up, didn't work. Goes down, didn't work. It's like, all right, hold off. And it goes up, down, taking this out. Then 3, and then 1, here it is. 2, boom, destroyed them all down in here. And that was the breakout. So when news happens, it just speeds up what we're doing. It's the same thing. It doesn't change. Price can't change. It's going to be the same thing as this on a 1 minute. It's just going to be much faster. So if you go to any news, let me think. When Saylor sold his Bitcoin, right? What was that on the monthly Bitcoin? Inside month, goes up. We like that breakout, but it didn't sustain that. Comes back in as a shooter. 2-2 right there. Boom. Inside, goes up, goes down. So you go to the week. You can see stuck in the middle, mother bar issues right here on the week. Chop, 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 chop. Chops them all up. Then it takes out the highs. 2-2 week right there. Boom. Other side. So it's always the same. It's just news will speed things up. And that's actually how Rob Smith figured out what the broadening formations weren't rare, because he was looking at a Fed day, and this is what happened. And I actually have a whole video on this. Let me see if I can find it for you quick. It's pretty neat stuff. I know it's not really that fun. We're kind of just waiting on these indexes. We got all these inside bars. Again. I don't know where it is. Yeah, I don't know. Maybe I moved it or something. But the gist was this. It was a Fed day and it was back, in 08, or actually it was before that. It was sometime I want to say it was very early 2000s. But Rob was watching it. So, going into the Fed day, the market kind of just does nothing. You get those mother bars. And then the news comes out and it's a rate cut. So they're cutting rates, which is discernibly good news. So this is what the market does. It goes up. And it's okay, good news, buy. Then it goes down below where the news came out, sell. Then it goes up again and continues. And Rob was like, why would that happen? The news came out, rate cut, discernibly good, but it went up, then down, then up again and kept going. And the reason it would happen is due to crowded positioning and how traders think. So it's what's happening in there? Well, you have the chop shop before the Fed, right? So price is just testing both sides. And then the Fed comes out, boom, good news. Anyone that's sitting there with their finger above the buy button, they buy. And they go zoop. And then once everyone that wanted to buy it bought, the first guy to go take profit causes everyone to take profit. And then it comes back to where the news came out. Anyone who is holding off, who is waiting, they're like, oh, good news? It's actually bad. So they sell below where the news came out, and now you have this huge broadening formation. And once the last guy sells down in here, the first guy to go and cover his short position, it starts coming back up, and then it goes back above the open, and now the range it's twice as big. So once you blow through it, everyone's chasing this thing. So what happened was you had an order vacuum. Because what this big green bar shows you, it's not a fair value gap showing you that there's resting buy orders or whatnot. What it's really showing you is everyone that wanted to buy this on the news got to buy. So when the next bar opens and it starts coming back in and I go to take my profit from my buy, there's no one to sell to because everyone that wanted to buy it up here, they already got in. So it's an order vacuum to the place where news came out. Once you take that out, everyone that bought, they have to start hitting the bid and getting out of their long positions. And the sellers start selling below that. And then once everyone's sold and all the longs get stopped out, the range is now twice as big as it was before. So when it comes back into the range, anyone short, they have to cover, and there's no one to buy their position from them. There's no one to buy their position from them. Sorry. So when they start going to buy, everyone that's short goes to buy, and all the longs that wanted to buy before, they go to buy, and everyone gets blown out. So the news level is this. This is the news level. It goes up, then down, then up. So the range is, small, up, down, up, like this. And that's just a broadening formation, right? So he noticed that. He was like, that's why that would happen. So whenever you look at any move ever, it's going to do that. Inside bar, up, down, boom, there it is on SPY. Oh, it's always doing that. We look at yesterday. Mother bar problems, down, and then up. And you can see in here, it's up, then down, then up. And it's not due to algorithms because there's no algorithm that can move the market down here and move it back up and make money. Because you'd have to sell millions of shares aggressively and then buy back all those shares and price would just go back to where it was. So it's not algorithms, it's crowded positions. Exactly how it reverses? Yeah. It's very cool stuff. And then what happens though is a lot of traders, this is what they'll do wrong or what will happen if you're looking at one time frame. you won't recognize when it gets bigger. It's like if you're looking at a 1 minute and you're zoomed in like this, you're like, wow, chop me up, chop me up, chop me up. Oh, there's a trend in here. I'm going to buy it. Oh, boom, it stops me out. Shoot. And then it goes inside. It's like, chop me up, chop me up. And then it goes, bam. And then when it keeps going, you're like, what happened? Well, once you get outside of the range, it drifts away. Because anyone that's short in here, they put their stops against stuff up in here, against high a day, right? Anyone short in here. If it gets out of that range, you start triggering their stops and they're forced to buy it up higher. Now, if it comes back in, anyone long in this range, now they get in trouble. So it goes both ways, but eventually when you get outside of it, it drifts. And that's why the lines are not horizontal. Because if you draw horizontal lines, you'll see it goes equal high, to the penny, and then it drifts outside of this, higher lows, and then now it's way above that. So it can't be horizontal lines. It has to be broadening lines. And once you break out of it, you'll see. For now, not yet. They're trying to. If you go to IWM, they're still working on that as well. You're welcome. I wish it wasn't, so slow right now, but the good thing is knowing when it's going to be slow. Inside 60s, inside 30s, about 25 minutes, that's when those double inside 30s and IWM could break. For now, you would see how that broadening formation restarted. These inside 30s caused it to go dink, dink, dink. But if you want to learn all of the strat, which I highly, if you're gonna do trading stuff, I highly suggest it, just because whatever you're gonna do, it'll benefit you knowing where, when, and why as far as entries are concerned. Even if you're an investor, right? You can use higher time frames too. Works the same way. We have a course that you can get access to for relatively cheap if you go and check out at stradlers.ai/premium-access. So if you're interested in that. That is the link, and it's in our VIP educational materials. So anyone that's in premium listening right now, I still highly suggest going to listen to that stuff if you haven't yet. In the beginning, it wasn't slow enough. I had to rewind. Yeah, that'll do it. True. So if we look in here, you can see semis. After they tried, so we had that 2230 here, right? Which puked pretty good. 7 points. It's a pretty solid move. So you're not going to lose money doing that. But notice, it went inside 60 because they failed to take the lows out. So these sellers were not aggressive enough to sell lower. And it starts grinding back up. And this inside 60, those mother bar issues. So you can see how they restart. They go up, and they go slightly lower, and they're coming back up. So they're trying to take out all these guys, all these pivots. And that would take the morning highs out, causing a little bit of short squeezing. Anyone trying to short this today? Looks like NVIDIA is still kind of grinding up. LRCX and AMAT, those are the stronger ones. So you can see they're still within their mother bars, but they have those broadening formations restarting in here. So LRCX, they're kicking in a little bit. AMAT's already taken morning highs out, so this is full time for continuity up. AMAT has to be stronger. I should have probably got you guys on that. I apologize. But you can see SPY on the inside 30s, they're working on it. So they're grinding higher. And if you look at the most twos, that flipped right here at 1201. So they're kind of, and this is also something to know about, is you can have resting orders. So someone has a resting sell order here. It's like it stops these guys out, takes it out. Then they sell more, stops these guys out, takes it out, and then they finally get above it, clear out that order. So outside day, we still would prefer that on SPY. But slow and steady, right? The 30s kicked in a little bit more here. The 60s, they're still green. So like we said on the flip, When that went inside 5 up, the 60-day went green. That was right there. That mattered. Notice that opening price, it never came back. And that brings you to another truth we know about the market. 80% of the market is traded by algorithms. 80% of volume. So that's why those opens matter. The second 60 of the day, the second 30, every 60 the whole trading day. That open matters because it shows you when they kick in or when they turn off their algorithms to buy or sell. So we can see how Qs, right when that opens, that mattered. Hasn't changed it. Go Dow Jones, that mattered for sure. And that's why we call it the flip. Because it's a flip. It's literally they sell and then they flip the switch. Now they're no longer selling. Changes what's going on, which is pretty neat. AAOI. Why is it going up? Let's see. So look at AAOI. So 3, gap down buy. There it is. Then on the gap down buy, how do you do it? 21260. You can see this is the mother bar, and it broke out of that. The inside 30 here caused that to break. So anyone that was shorting into the hole, these pivots, inside, pivot, gone. Takes them all out. And you can see it's, what, 2 up 30, 2 up 62 going 3-day, overriding the month and week sellers. Now it's a little bit too high for my liking, and you'd have to let it come down first. But there's SPY. So like we said, it's going to break out eventually, and here it is. So it broke out here, and that's causing it to drift away. So anyone that was shorting in this with stops against these pivots, they're getting in trouble. In about 20 minutes, since we're still inside 60, we just have to be aware of that because we know these broadening formations do get bigger. So we can see at the inside 30, it goes up, it hits the target here, but then there was some profit taken there. So it's like, is that just short term or do they try and reclaim it? But this inside 60 SPY is going to restart that price discovery just like every other inside bar. So 18 minutes, it's still inside. And that's going to matter because we know, if it starts coming back in like it is right now, that could turn into further problems, but we'll see if they can hold them up there, at least for another 20 minutes. If we look across the board, most things are firm. So if we look in here, most things went inside on the flip. We didn't see any or many reversals, just a few. So if we go in here, we go scenario 1. Got, I'm not even sure how many, but let's see. We got 19 inside bars, which includes SPY, Qs, IWM, Dow Jones. So this is something we look for. It's called simultaneous break. Everything going inside bar tells you a scenario 2 has to be coming because you cannot stay inside forever. For example, if you try to stay inside forever, it'd go inside, 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 and then eventually delist, right? No trading going on. So eventually one has to go 2. So all these indexes going 1, industrials 1, materials, crypto, healthcares, all of this is going to matter. So either side of these inside bars in 20 minutes would get your attention, either to cause a 3 or to stay 2. It does look like SPY, you can see this. So they come back in, still inside 60, which means this broadening formation, that could kick in. That could be an issue. And it's just because when you're stuck inside like that, it makes it easier for price to drift back through. So they tried, but they did not stay out of there. VIX, let's see. Yeah, they're still selling the VIX down, so you can see what the VIX is doing, right? I'm going to turn this off. But if you look at the VIX, you can see they're not consolidating. They're 2 on the month, 2 on the week, 2 on the day. But they went 2s down, bottom of the triangle, 2s up, top of the triangle. So we go into that 60-minute. You can see how they're really ripping them back and forth in here. They get scared, then they bring them in, and then rev strat, right? And then mother bar, chop them up in the middle, take them up in here, bring them back in, just going back and forth. And people say you can't do TA on the VIX. Incorrect. Everything trades in 1s, 2s, and 3s. So it may not be moving for the reasons of the market and buying and selling. It kind of is. It's a derivative, but works the same way as everything else. What we really want to see is that SPY inside 60 kick into the upside. That'd be my preference. But they go 225ers down, so this is changing what's going on here. Short term. It's trying to change that 30. And if that 30 changes, it could rev strat change the 60 because traders will have their stops against this stuff. So that could definitely turn it into further issues if they start changing that. And that 5er kicks it in right there. Got chopped up twice, but then a 1 minute. Yeah. Well, the thing with the 1 minute is like, you got to make sure the way you're getting to the 1 minute starts on a bigger time frame. It's like, well, the month, week, day 60 look like this, so I'm going to use the 1 minute to cause this to happen. Instead of like, oh, I'm going to open it up on the 1 minute, and then, oh, there's a reversal. I'm going to take that. Two very different things. I don't have an indicator here. Are you talking about this one? So you can see SPY, 225ers, dink, kicks it in to the broadening formation, changes the 30 minutes. So anyone that was buying in here, they're now in a losing position. Not because the strat is a strategy, just because that's true. If you bought it at 735.87, now it's changed what it's doing. And that change, since they're losing, now they've got to do something. If they have stops against this stuff, what you would see is they'll take that out and hopefully speed it up for you. Now, as we get to the new 60, we got still 12 minutes. So the question is, does it stay looking something like this as a shooter for the next flip, which I would like that, 2-2 reversal to cause pivot machine gun? Or, do they firm back up or maybe go outside? At this point, I'm still more interested in the next flip. But that 5er is creating the shooter 30, so... we will see. So on the next flip, technically we could go either way. It's like this 60, we could break them to the upside and go outside day. Be a nice ripper, 4 points. Or we go rev strat 30 down, inside 60 down, which would be 7 points to take out low a day if they take them all out. very least, you take out a lot of these pivots, I'd imagine. And if it does do that, they still have weekly magnitude to go after. So what Rob would say is the easy stuff is when you have bigger signals. It's like we have 2 going 3 month, 2 week in force. The easy stuff is when you get signals into that direction. So if we get a RevStrat 30 to trigger a 60, that would kick us back in the direction of the bigger signal with a bigger target. As you can see, this would be the weekly target here. Change the color of it. There. So we could say, right, if that kicks in on the 30 as an outside bar or RevStrat, you'd take out all these guys really fast because they're nearby. That would cause the 60, which has a target to this stuff. So take this stuff out. And if that worked and it changed the day, green to red, anyone that bought today, they'd have the monthly, weekly seller selling into their stops at low day. So if that kicks in, it could go wham, take them all out down into the weekly target of 722.59. That would be nuts, wouldn't it? That's possible. So by understanding that pivots and how things can speed up, we can say if that 30 kicks in and that 60 kicks in, it might change everything. And that would occur in 9 minutes and 14 seconds. It's already starting to occur on the 5 minute, but to get the big move, right, 9 minutes and 7 seconds here to make that happen. So if we wanted to go lotto style on a Friday, I'd be SPX, probably daily open 7-3-14, if you're going to look at them. They're like $100 a piece, give or take. And that's all we'd have to do on the new 60 flip. So we'd have to see that 30 work, see that 60 work, and we'd like to see, we'd have to see everything do it. We'd have to see Qs kick into these guys. We'd have to see semis kick in, which that, definitely could. It's pretty much a doji at this point. MicroStrategy. Yeah, it's only got 8 minutes though, so still got this mother bar issue in there. So we'll see. 7 minutes, 53 seconds. If we look at SPY, you can see, so they go 225er up, 225er down, hits the first pivot, which is the first pivot. That was the target to take this out. 3, up, down, taking the low of the 3. Still an inside 60. And this is why things have to close and when things happen matters, because if this 30 goes reversal, that's good. If this goes 225er and they close up in here, you'd be nowhere near a 30 reversal in 8 minutes. So things have to set up. It's very specific. So you can see the 5 minute re-breaks the pivot here. That is the 15-minute reversal. So they're starting to come into some of the initial triggers. 6 minutes. After everything we've discussed today, I'm very tempted. Like I need to eat something. And then I have some practice with my coach. So I'm tempted to step away here, but I also want the clip. You know? If we do take all these guys out, even if we don't take out low day, it's like this. If we can puke from here to here, it's like $3. Those options will still spike pretty good. So, right? To eat or to wait? I think I'm just going to wait. I'm going to go on mute, so we're just going to pause. And in about 6 minutes, we'll see if they really follow through on that 225er, right? This is the best trading I've ever had online. Thank you. Well, man, I really appreciate that. Sorry if you had some reverb there. Now I want to see the best pivot machine gun puker they've got, but we got to see on the flip. You can see SPY, they're starting to form the shooter 60 with the shooter 30 to cause it. We've got 4 minutes to just close it, something like this. Maybe they go outside 30. That would be okay by me if they go 3-2. What it would show is more aggression. If the buyers are willing to buy it up, they reclaim. And then the sellers would be willing to sell down. But we're going to find out. The thing about consolidations is, since these are broadening formations, it's very, very specific stuff. Because you're going into a battle between those buyers and sellers. And you got to know what's going on. So you see the 5 minute, that reversal here completed this broadening formation. So they went down, up, inside, down, up, down. Here's the broadening formation. So in 3 minutes, we want to break out of this thing, if that's going to really kick in. If not, you can see the broadening formation. It's like if it doesn't kick in, the new 60 opens, changes what's going on the 5 minute, doesn't break any of this stuff. So that would give you an outside day. So the flip, 3 minutes, once again, to the flip. You can already see they're starting to do a little bit of profit taking right there. So very, very specific. Let's see what the energies look like. So the energies, 3, 230s. Let's see. They're inside day. But you can see during that inside day energies, right? 3, 1, 1, 1, 1, 3 goes down, then comes back up. So they're trying to take that out, but small action. So if we look at tech and semis, this is where we see they definitely are firmer. So if we look at these 30s, there's 2s up on the 30s, still green, still reclaiming this outside day. No inside 60s, so no signals. But semis and tech, they're still a little bit firmer, so they're not setting up those 30s with us like we'd want to see. Yep, we got a minute to the flip here, so we're going to see this outside fiver. That's going to matter into the flip too, because that's a broadening formation. So it shows buyer and seller aggression. Sellers are willing to sell down, buyers are willing to buy up here. The question is, does it open and then the sellers try and sell down again, or does it open and the buyers are still willing to buy up and they trigger the 60? Since that day is still pretty green without any signals down, it's not bearish for us. Got about 28 seconds here. Mother of all flips. Yeah, the other thing that's going on is you have the Europe close. Europe market closes out right now. So you can see right here on the flip, 3, 2, 5er, 60, 30s, 5ers, they go green with the day. So at that point, the sellers in here, they're getting countered by the 60 daily buyer. So these 5-minute guys, incorrect on the flip. If it was going to change, it'd be 3, 2, 2, 5er to cause the 30 to cause the 60, but we don't see that as of now. It's not true. So you can see right here, defend 73473. If they flip that, that would be the sellers trying to kick in on the flip. Oh, 2 hours ago, sorry. I know it was at 0:30. So wait, for CST, that's 10:30. Got it. I personally, I haven't ever really tracked it just because Europe hasn't really mattered. Not in my lifetime. For better or worse, you know? So you can see if we look at the 4-hour basis, this is what she's talking about in the chat. This is the new 4-hour opening up. So notice 3-1. So that shows us inside 4-hour, inside 30, inside 60, which means, right? It would be easier to get that to go 3-2-2-5er, which would change what? Well, it might cause the 30, it might cause the 60. So that's definitely a possibility, right? Like we said, if that's going to change, that's what would do it. So we're going to mind that. What we'd like to see is a 2-2-5er, but right now it's 2 up in red. It might even go 3-3. So we'll see. And what matters is, can we use a smaller time frame to cause a bigger time frame to do something? If this goes 3-2-2, it causes the 30 because we can gauge the magnitude of this reversal. So if we look at that, 3-2-2, we have a reclaim coming back through a range. We have a reversal. We have a target, which is the other side of the 3. So if this goes 3-2-2, the target is that, which causes the 30. Which has a target down here, which causes the 60. And if that doesn't work, the day is still green, and we're still not going down on the 30-60 intraday basis. So either that kicks in, that just goes in a minute 50 seconds, or it doesn't, and we're still inside. About EU close, I mean, it depends what you're looking at. Like if you're looking at currencies like euro, US dollar, it probably does matter. You know, if we pull it up. Let's see if the volatility picked up in here. Yeah, so you can see this is euro close. So it goes 3, 1, 1, 2, boom, right there. So mother bar, test the highs, test the lows. And then mother bar again. Test the highs in here, test the lows in here, inside, then breakout. It matters more when you have, like, what you want to think is that the only thing that changes between any price is narrative which means like, why is NVIDIA going up? It's like, well, every company in the world is going to use AI. It's like, well, that's narrative, right? And that really doesn't change what price is doing, but it might give you, the reason as to what's going on and why it would continue, why it wouldn't, or when things change. And volatility. So volatility is like, how fast is it actually moving up or down? So when you think like Europe closes at whatever time, it's like that would just be changing the volatility, just like New York Open on the SPY. It's like it changes the volatility. It's like really volatile in here. It's moving, 0.5%, 15 minutes, versus in here after the Open's done, right? Really contracts, and then the rest of the day in here, it's really been tight. Unless right now, if we go 3-2-2-5er, causing the 30, causing the 60. That could definitely speed things up. And the way that works is you can take a really small position here with a tight stop. If it works, you can add, and then you can add, and then maybe they go wham and take them all out. So let's find out. Drawing broadening formations. The threes are broadening formations. So when we're drawing them, we're just drawing threes. So if you look here, you might not see it on this time frame. So if you go to a 20-minute, see how this is a 3? That's how you can draw it from here to here. So we go to a 5-minute. That outside 20-minute is this broadening formation. So you just want to use your brain to imagine where the 3 would be. Like if we look at SPY right now, where's it trying to go 3? Well, it took out this high. It's trying to go back down here and take out this low. So the 3 would be in here this week. Once that week closes, ran out of time, which is why this needs to kick in like now. Like we want this to go right now so we have enough time in the last 2 hours, 20 minutes of the day to actually puke. So we can see we have the 3-2-2 fun to say, fun to do. The trigger 73445 on SPY here. If this works, the magnitude of target 1 is 73380, causing the RevStrat 30 down, which would be a 1-2-2 reversal strategy, causing a 2-1-2 60-minute reversal SPY. So if this works, we've got 2 minutes and 37 seconds to find out if it's below 734.45. MicroStrategy triggered it. Just continuation, 3-2-30, yep. And commonly when you're trading during consolidations, you'll see 3-2s. Normally pop them out of the consolidation just because their aggression increases. But let's see. Qs, it's slightly less green on the day, so it'd be a little easier to change that color. Still inside on all these time frames. So 2 minutes. Come on, break it. Do something. IWM 1-3, 2 down 30, inside 60 down. This is the first one down. So you can see the shooter 5-minute here caused that 3-2 30 to break. So SPY's holding a little bit more firm. And the thing we have to realize is what we're trying to do when we're trading is we're trying to time. It's like there's this guy who's been selling all month. He was selling last week, selling the week before, he's selling the week before that, he's selling this week. We're trying to time when he enters the market. Or at least, when that group of traders that is selling SPY this month wants to short SPY. So we have to realize we want stuff that breaks, it starts going, and then we identify that they're there because it works. And then we just want to see it follow through. Because if we paired up with all these guys who have stops in here and they're aggressively selling, it should just go. If this doesn't work, then we're just kind of stuck in here. So for now, SPY is still unable to do that. They're trying. We got 40 seconds left. IWM was able. Q's is just about to break the 30s down, so that'd be a little bit of a reversal. Right there. So they're trying. Come on, 30 seconds to trigger it. Time is lunchtime. I'm good if it's lunchtime. Hopefully they have their stops all walked up right here so we can take them out while they're eating lunch. I was supposed to leave and get lunch, so give me their lunchtime stops. 1 second and gone. So notice that signal that lasted 5 minutes. Opens here, closes down here. That's what it's supposed to do. Signals are designed to put you in a winning trade. Now, if it's 2 again, breaking again, notice still good. So if you look at the status here, I don't know if I can make it bigger text, but still good. Now it causes the 30. Boom. Now, if that works, it's going to cause the 60. So we use the 5 minute, hits its target 1 right there at 733.80, causing the 30 group to go into a losing trade. Anyone that bought in here. So it should, idealistically, it should just go. Now it might micro triangle in here, stopping some tighter stuff out. But we want to see them just go if it's going to work. Go, 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 go. Yeah. And I don't want you guys to get married to it. You can get married to stuff, and, you know, getting married to a 30-minute signal is not the best thing to do. So just be aware. If this doesn't work, it doesn't work. We just don't want to stick around. It should just hopefully get going quick. Now, we can also ask, like, what are we creating? So in 3 minutes and 50 seconds, we have an outside 15. 3-2 is one of the most aggressive forms of breaking out you can do. So if we go 3-2-15 in 3 minutes, that would look pretty good too, at least for the short side of things. And that's the same as just this broadening formation here on the 5 minute, getting out of that. If we go to Qs, similarly, they broke down, and you can see whenever you break levels, you're at risk they come back. So we want them to just go. Just go. Dow Jones, still not much. Small caps, took the 60 target. You see, took all the nearby 30 targets. So that's what we call exhaustion risk. Notice, small caps, they took out all nearby targets. And this is the only issue when you're trading is once that happens, now it's like, now what? Are those sellers willing to sell lower? I hope so. At least I'd want them to. Seems kind of meh right now. That should have just gone. Now they could micro triangle. You know, they could go like stop these guys out and then go like this. That's still possible. I would say the 5 minutes is still good. So notice the status here. It says still good. So we'll give it some time. But we want stuff to just break and go. So that's already a red flag right there. Because the Rev Strat shows you whoever bought up in here, they just went into a loser, but they didn't get out. So that could be the daily buyers sitting down here with a limit order. It could be just the sellers aren't willing to sell. Something's going on here that we don't know about. So you can see they tick down. They reclaim the target 1, potential 3 coming the other direction. And they're still double inside 60 SPY. So the 5 minute was unable to take the 60 down. It didn't work. Now, technically, it hasn't reversed yet, so this could just be stopping these guys out and then still 2 down, but it's hard to say because that should have just gone. So that was all we had. All the sellers had in them, unless that can re-break it. And when we say tight stop, guys, we mean this. If we're in a downtrend, the tight stop guys are anyone with their stops right up against this stuff. So it's like tight stop guys gone. If they're going to go, this would probably be your last effort to try and make it happen. This is a farce, believe. It's true. I mean, it's a 2 going 3 against. If it goes 3, didn't work. If we go back to the cues, you can see the broadening formation here. Ticks down, comes up a little bit. So what's the next 2? On 20 seconds, right? If we're going to continue, we want to go 2 down 5er. Now, it's got a little distance to make that happen, about $1 to take this out. Could it? Absolutely, right? 2 down, 2 down, 2 down. That'd just be continuation. So we'll see in 20 seconds. If we go to SPY, 2 down, 2 down. We'll see. Now we got 2 seconds. It's pretty specific. So now they go 1. So notice we went downtrend. Now it's inside bar. So that firms it up because it's now no longer making lower lows. It's also nowhere near doing it. Let's see. You see IWM after taking them all out. Same thing. So it ticks down. That one goes 1. They firm back up. What is the next 2? Do they confirm or negate the 30s down? They really don't want me to go eat my lunch, do they? Let's see if this will load in. So if we blow this up a little bit, you'll notice it says 322 fun to say, fun to do, which is that signal here that took this out. It's either retracement or still good. So if it's a 1, it's technically not reversing. If that 1 is red, that seller's technically still there, even though it's equilibrium. So it's really, if this goes 2-2, then not sure on NQ. Let's see NASDAQ. Yeah, so you can see NASDAQ. It's pretty much the same as what we're looking at on indexes. So it's trying to rev strat that, but this would be that broadening support. So you got to get below that. It's still good technically on the 5ers, so they're trying. Currently, all the indexes are inside 5ers, so they're not negating. They're also not confirming. Slow grind. Well, the only reason we could really have to stick around here is to say the 60's still red, which means that monthly, weekly guy that was selling earlier, that was willing to sell this, down a good bit, they're here. So we can give them the benefit of the doubt because of that, but it's got to pick up soon because, again, like when things happen matters. We want that 60 to break ASAP. It's been 20 minutes and it still has yet to break. So we're running out of time to actually have the signals breaking and in force. And that matters because in order to get a signal like this, for example, it's got to break, go down there, and then close. So if it takes forever to break, it can't go as far, or at least it's more tricky to get it to go far. That seller is still present, so we'll see. Slow and steady. It's a waiting game. Yeah, once you have a winner, it's a waiting game. Once you leave, the market will move. It seems like it happens a lot. I'm willing to. I mean, I have some lottos. I pretty much have lottos on both sides since I had the calls in the morning that I was able to reduce a little bit on. And I have some puts. So whatever it does, I guess if it does nothing, I'll lose a little bit, but 3 seconds and those inside fivers close out to go inside down to try and re-break. Dow Jones did take the 30s down, but man, these guys are slow. I've got to get going soon, man. I'm not gonna have enough time to eat lunch. So what we can say is 2 down, 1, 2 down, which confirms it. But it's a 2 down going 3. So it's trying to rev strat because it's mother bar. So for now, it's still 2 down. We would say, if you're trailing your stop, you'd have it pretty much at the top of this inside bar or the top of the mother bar, depending on how you want to risk it. But you'd want to stop right at that 225er reversal pretty much. And then it's either going to work or it's not. At least you were able to put yourself in a winning position where you might be able to not lose all of it if you're playing 0 DTE. But since this is a broadening formation, if it starts coming back through that, the outside 30 would be up in here. So we don't want to widen our stops. That's definitely not what we want to do. Yeah, Mr. Savage Ad. Well, I mean, we have your mother bar problem, so the fact that that didn't work leaves it as a problem if we can't break it, so you're correct. And you can see on that 5 minutes, so they ticked down, but it didn't stay down, and staying down that's the only thing that's bearish, so unless they can re-break all that stuff, what we would say is this broadening formation still is showing you that this equilibrium or this consolidation, they're still testing both sides if they can't get out of it. So it's like, now what? Are you going to test the highs, or are we going to just, drop a few pennies lower, take this out, and hopefully break out of it? I don't know. I just want them to do it. How's the golf game? Oh, that's okay. I mean, I had to take a break for a while, just because I was hitting on mats a little too much, and just because of how the Juju swing works, you normally take a pretty good divot, like because you hit ball first and then you take like a huge pelt. So it was messing a little bit with my right tricep, not the tendon really, but more of like the connection of the muscle and the tendon. So I had to take a little bit of a break. Plus I had to focus on some other things, but it's okay. I don't know. I haven't really improved much in recent history. These indicators, they will be. It's stuff that I've just put together recently, so they're not anywhere. What I'm thinking is just putting together a whole suite of them. So you can see if we're looking at the 322 fun to say, fun to do, it's technically still good. It just hasn't gone anywhere. Mother bar issues here on the fivers, so there's chopping them up. Are mother bars always a 3? No. A mother bar could be a 1 or a 2 or a 3. It's just any bar you're within. So if we look in here, these two bars are within this bar. That's a mother bar. This big bar here. This inside bar is inside this inside bar. This inside bar presently is a mother bar to this. Oh, looking for it in training view? No. I just put them together. It's nothing like secret. There it is. So you can see mother bar fiver. Anyone with stops down here, can we take them out? Use them to get the 60s. Notice it's still good. In profit 86 cents. So it's still working. 93 cents now. Come on. We've been patient. I've never shown so much patience to the market. Especially with the 0 DTE. Do it. So there's target 2 on the fiver. About $1 on SPY. If we go on Qs, they had to use a new fiver signal, but same difference. Dow Jones takes the 60 down with IWM 60s down. So you got Dow and IWM to break. SPY and Qs would be the last 2 to break. Qs just broke. So SPY is the last one to break. Lucky me, right? We picked the slightly stronger one. Patience will pay. I guess we'll find out. With simultaneous breaks, we want them to break right away and do it all at the same time. So the fact that took a half hour, not my favorite, but if we can pop out of this broadening formation, whoever's in here, loser. Just like Qs, loser. All these guys, gone. So tech and semis, I imagine, is leading this stuff down. So tech actually hasn't broken yet. Semis just broke. So if we go in here, we'll see. I know it's exciting when things start breaking, but we just still have to remember the truths, right? Just because we break a pivot doesn't mean it has to be bearish. What's bearish is staying and going through more. We want to go through as many as possible. So, it went $1 down. Still nothing to write home about yet. We want to see SPY get outside of this. For now, financials are doing jack nothing. They're still buying some healthcares as a RevStrat 30. Utilities took the 60s down. Communications, they got hit a little bit on that fiver. Energies, they're going 3s. Utilities are RevStrat 30, so that's good. Tech and semis are 30s down. Marvell is a 2 going through. Marvell is a chop shop. Don't touch that. MU. That one's, you can see bringing them in a little bit. And you can see how MU did that with the triangle. High, low, new high. 222. Just shotgun. And it just hit its target there. So if you look at SPY, they tried to knock on them. But that's not enough to scare everyone out. You can see on the 30, they have 20 seconds. So the question is always confirm or negate. So we look in here on the 60s. We do have a good chunk of things that went 2 down 60. Now it took forever, which means these bars are less likely to be, long red bars like we wanted to see. However, they still have a half hour, so they still got time on them. If we look at the 30s, you see SPY reversal, Q's reversal, IWM continued, Dow reversal, materials continued, industrials continue. Everything just changed just now. But you can see semis right there. They just reconfirmed. So that seller that picked up, they kept selling into the new 30. Financials just went 30s down. A little bit of XOP. So if we look at SPY, changes what's going on. So we had a rev strat, and now it's 1. So that rev strat doesn't exist anymore. You could say the 2-bar rev strat is still good. 1, 2, 2. But it has to be below this. 733.46 for that to continue. So it's still, we would say, these 2 hours stuck inside of this until we can pop out of that. So very slow. The fivers are considered still good as well on SPY. Pretty much everything goes inside 5 or inside 30. And the problem with, if your signal doesn't work right away is this. So if you look at SPY, if this fiver firms up, what happens? Well, since it's been just grinding, pivot machine gun, pivot, 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 pivot. It's going to stop all these guys out real fast. So if you're holding 0 DTE options, if that breaks, yeah, it's, inside 60, it's inside 30, it's not going up. But that could, spike up fast and then down fast. Might triangle out and then try again. But not what we're looking for, at least not yet. Unless we can take those 30s down. They're still selling off some utilities. Tech went inside 30. Semis are still slight 2 down. You can see CAT. They're still selling that. We mentioned that one this morning on the 2-2 day. So they're kicking that in on the 60s. So you can see now that 322 is no longer still good. It went lower highs until right there. And the question is that just slight higher high to try and go 3 and actually get this stuff going? Or is that 2-2 and now they're going to rip them through here? I'm not sure. When we're inside like this, I don't know. I'd prefer the downside. I still want to see it. Or else I wouldn't sit here. Question is, are Tech and Semis going to puke enough to make it happen? If we go to Marvell, it just went Rev Strat 30 pivot machine gun, so that might help out a little bit. MU is still pretty red. AMD, just 2 230s there, so it's trying to help out. Nvidia, nothing. Microsoft, nothing. They're still firm actually, 2 up 60s. So you go to Meta, they're still firm. Google, that's still pretty firm as well. So all these big names within the indexes that would have to help us out, they're not there to help us out. Only thing I can see really falling through is Utes on the downside. That's really it. So I think that's it. I don't think we're getting it. 225 or against, and that's coming back through the broadening formation, so that changes what's going on. Only way you're getting that is if we can trigger these 60s, and you might have to wait another 25 minutes to make that happen, so we're starting to run out of day for that. That all being said, we tried, and it didn't work, and that's okay. I mean, it hit its target, you got $1, but didn't do what we wanted to do. Now, what that shows you, though, is the importance using the lower time frame to cause it. Because if that was going to really puke, that 225 would have ripped through here, caused it, and it would have been beautiful. Since it didn't, lose a little, that's fine. Later today, if the market's really going to move, these inside 60s will break. So I'm going to hop off. But coming back through this broadening formation, they could break the 60s the other way. Or they might come back in 20 minutes and break it down like we would prefer. So as you go into the end of the day, just look for that next 2 on the 60-minute and mind the flip. It's in 24 minutes. That being said, though, I'm going to have to hop off. So hopefully you guys enjoyed the stream today. I know it was kind of slow as we got into the afternoon, but is what it is. It's kind of been that way recently. Past 4 days, we've been inside of this range. And if you'd like to support us, join us. Go to stratalerts.ai. I'll drop it in the chat again. We go live we go live on Friday, on YouTube. But the rest of the week, other 4 days, we are live in the Discord room. So adios, guys. Have a good weekend, and we will see you guys next week and hopefully in the weekend vid. Adios.